Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, good morning, guys. Welcome back to another live stream. Hope you're doing well this morning or afternoon, wherever you are in the world. I am back from Greece, which is you can see I got my my nickname here, back from Greece. So, it's like my status. Anyways, I hope you guys are doing well, and welcome back to another live stream. I definitely missed doing the streams. It's kind of like my daily ritual during normal times, but the wedding was wonderful. We ate a lot of good food, drank a lot of good wine, spent a lot of time with family. It was great. What a beautiful country. Greece is absolutely just gorgeous, man. The water there is so blue. I wish my account was as blue as that water, man, because that was crazy blue water. Hope you're all doing well. We got a lot to talk about. I have been staying pretty in the loop with everything. Although, I was on vacation, I still, it's hard for me to really ever pull away from this stuff. It is very minute to minute, and I had plenty of time off, but also keeping an eye on things as always. So we're going to discuss some charts. We're going to take a look at some things. If you haven't already seen or heard from some of my videos, I'm long silver right now. It is my biggest position currently, and has been going really well. We got this entry after the kind of break and pull back into this zone, and I've been just trailing stops on this one a couple different times. I've trailed stops here. Now I've trailed stops up to this today. This morning I went ahead and trailed stops just below this swing low that we saw recently. So with that, what I'm looking for is I'm looking for further higher highs, further higher lows in order to trail a stop loss and keep this thing running as long as it wants to run, really. I got to move my mic here, get it in the right spot so you guys can hear me and not get shown the mic too much. There you go. So anyways, what I'm looking for here is higher lows and higher highs from here just to continue to trail a stop loss on this trade. That being said, this morning we do have some news that's coming out. We have GDP numbers. So I'm just going to quickly pull up Forex Factory just so we can see this. So we have final GDP numbers coming out. Forecasts are for 3%. A disappointment on this front would probably be good for my silver position. And gold would also probably go up on that, etc. And what we're looking at here, of course, with GDP statistics is the idea of how much the economy is pumping out in terms of, growth. Now, with GDP, there is advanced GDP, there's preliminary GDP, and there's final GDP. Today, we are getting the third sort of component of GDP, which, of course, has the potential to move the markets. The one that moves the markets most usually, from what I've seen, is advanced GDP. It's the early kind of forecast for GDP. This is the final kind of tallied up figures for GDP. So how would this impact charts potentially this morning? Well, we don't know what the value is going to be. So I'm not going to try and tell you, oh, it's going to go up or it's going to go down. That would be foolish of me to try and say that. What would, however, be worth noting is once we get the data, how could it potentially change the trends or continue the trends that we've been seeing in this market? So a couple of things to think about here is that if we get GDP numbers coming in strong, that's probably going to make the stock market, it's going to kind of be neutral because the stock market's really hyped up on rate cuts right now, which strong GDP figures might hurt that story. But one thing's pretty clear. If you get a strong GDP print, that's going to be good for the US dollar and not so great for metals, which would not be great for my current positioning. And if you get weaker than expected GDP numbers, if we see the economy continue to cool, that would be considered weak for the dollar and strong for metals, which sort of thrive off of that uncertainty. So if we pull up the dollar index just for a second, if we take a look at the daily chart, this is where I'm at with the dollar. The dollar index has been trending down for months now, and in the last month, it's really just gone sideways. This has been a terrible year to be a dollar bull because this year we've just seen trends to the downside as the Fed has sort of made it very clear that they want to cut rates. I mean, they cut 50 basis points to my surprise, as well as many other very intelligent people, many more intelligent people than myself, were very much convinced that a 50 basis point cut would be too aggressive and that a 25 basis point cut would be more appropriate to begin the process. That being said, we can't live in the what should have been or could have been. The Fed decided to cut 50 basis points, and that's where we're at. So the Fed cut 50 basis points. The dollar continues its downtrend. And the question now is whether or not economic data points like the one we're getting in 7 minutes from now will continue to prolong or extend that downward trend. Meaning if US economic data is cool this morning, we see more cuts coming, the dollar index is probably going to continue to go lower and break through lows. That's why the data points are so important this morning. And that's why, again, I've got a redefined energy or reconfirmed bias towards just how important fundamentals are. I was able to pretty much keep up with the market based on the economic data points while I was in Greece, which is amazing because, of course, you know what I use. I use the EdgeFinder. So just by keeping an eye on the EdgeFinder, I basically was able to keep tabs on what was happening in the market without spending so much time. I love that about when I go on trips. I can stay locked in on the markets without sitting there staring at it like I do all day usually, right? So every time I go on vacation, I rely heavily on the EdgeFinder just to keep me up to speed. And that is one of the coolest features, I have to say. From somebody who is very busy, I imagine many of you guys are as well, being able to pull up a tool that basically just heat seeks what's going on for you is incredible. We got a lot to talk about, though, on the metal side. Why are they up so much? Well, the answer, in my view, is China. Have you guys seen this chart? This is the Chinese stock market, which is going parabolic the last few days. Guys, we're talking about in the last 3 days, the Chinese stock market is up like 15%, which is an insane boom going on in China. And I'm not super informed on this, but I know the general idea is that there is some heavy stimulus kind of concepts coming out of China. Basically, the government central bank, they're not very happy with the performance of their stock market, looking to get involved more heavily, which we know from the Federal Reserve, as an example, is, has a lot of impact on the stock market. If you get a stock market wanting to, get involved, or a central bank wanting to get involved to sort of lower borrowing costs, make money more affordable, that is going to usually cause the stock market to go up so long as the economy is hanging in there. So China has been a beaten down stock market for the better half of a few years now, right? Going back to 2021, where it peaked out here, we've seen just a downtrend. I have played my hand a couple of times at getting long Chinese stocks. I wish I was long them today. I have not. I've caught some really good moves in the stock market bounce that we saw right here. I made some good money on FXI, the ETF that tracks China. So, am I a buyer at these levels? No, but I am very happy to see the Chinese stock market starting to participate. I do think that's also good for the US stock market. We see the Nikkei, a little bit of breakout here, trying to squeeze above this area here. On the S&P 500, we've broken to new highs yet again. Still more strength to come, it seems like. Though I am bullish, I'd like to see a pullback before I get involved. I can't really chase this thing. So this one's left me behind for now. So I'm on the sidelines with that. NASDAQ, same thing, broke through resistance, looking for a pullback. If we can get it, I may be interested, especially as we turn the month from this September seasonality, which did not play out, by the way, whatsoever. Just so unless we see some drastic thing in the last few days of September here, guys, we have seen seasonality get completely rejected this year, meaning usually September is a bearish month for stocks. This year, not so much. So you got to be careful with seasonality, because I personally, would have loved if the stock market came down in September, because I sort of stayed cash and stayed on the sidelines. That ended up being the wrong call with the stock market. Of course, seasonality is a real force and it is a real thing. And some of my best trades ever have come from respecting seasonality, but nothing works 100%. Nothing works 100%. So just because seasonality was bearish for the month of September, that was a part of the reason why I stayed cash heavy. Now, again, I was wrong about that. I wish I was long the S&P 500. It would have been a wonderful, wonderful month to be long. But again, historically speaking, there is a bearish tilt in the month of September. That being said, doesn't mean every month has to be bearish. And this month, the S&P 500 rocketed up another 3.5% or so. So, again, nothing works perfectly. So when it comes to trading, this is why trading is hard. If it was easy as, oh, I just, sell when seasonality is bearish, buy when seasonality. If it was that easy, right? Everybody and their brother would be doing this, and it would be, everybody would be making money from the markets. But we know most people do not make money from the markets. Most people lose money from the markets. So to make money in the markets, you have to look at a lot of different things. You have to do your homework, do your research, do your due diligence, and make educated guesses with small risk per trade. That is what we preach over and over on this stream. By the way, if you guys would like to try out the EdgeFinder that I just pulled up, we have a paid trial. It is $199 for 30 days access to the tool. The reason we charge a fee is because we, of course, have to administer the access. It is a manual process on our end. We also have a dedicated rep that helps you out during your 30-day trial to answer any questions, and we'll check in with you periodically throughout your trial to make sure things are going well. If you would like to hear about that, or you'd like to get more information, you can apply for that down below right here in the chat. Just below me, there's that message. It is in the live stream chat if you're watching there. If you're watching on Twitter, maybe we can add a pinned comment there just to make sure that people can submit their applications there. Now, last thing I'll say about the trial fee is if you pay the $200 trial fee, it does get credited towards your final purchase of the EdgeFinder. So it's not money lost. It's just money down so that we know we can take you seriously, that you're dedicated to actually trying the tool for a 30-day period. And this helps us weed out people who are just wanting free stuff and they want to switch emails every month and get a new free trial. We used to offer free trials, and what would happen is people would just switch their email every month and request another trial. So they're just getting it for free. So we decided if you're serious about the EdgeFinder, you'd like to try it out, you'd like to start using the tools that we use to help spot these kinds of trades that we're taking, you can get access for a $200 fee. It is 30 days access, and that fee gets credited towards your final purchase. So if you'd like some more information about that, make sure to apply for a trial using the link in the chat right now. It should also be in the description or pinned comment if you're on Twitter. All right, let's see how things go here with, we've got unemployment claims and GDP numbers. Should be pretty interesting to see how this impacts the chart. I'm going to try and switch over to the all markets view just so we can get an idea of how things react. Coming in just a second, we got breaking news. All right, guys, got S&P over here, NAS, Dow Jones, dollars right here. You got the euro, the pound, gold, and you got oil in the bottom right, which oil's been getting killed recently. I don't know if you guys saw that. All right, gold coming down a little bit here. S&P, NAS, Dow Jones up slightly. All right, durable goods came in a little better than expected. Final GDP did come in at 3% as expected. Unemployment claims came in better than expected. So arguably some positive signs for the economy, which would make sense to push down things like gold, silver, etc., and should act to strengthen the dollar here. Let's see if that is correct. A little bit of pump on the dollar, not much there. S&P 500 up 0.7%. NAS up 1.25. You got the Dow Jones up 0.5%. The Russell's up 1%. Nikkei's up 2%. China's still up a crazy amount today, 7.8%. Gold coming down a little bit here. Silver also coming down. I do have my stop loss trailed on this one. So if we do see a full-on reversal on silver, I'm still going to make some money on this trade, which is not a bad spot to be in. So here's the silver positioning, by the way. Got a nice little trade running on this one. We'll see if this one wants to keep going. If we break this low, I'm taken out for a profit. That is the silver play that I'm currently in for the last week or so. Yeah. So can we talk about oil? Yeah, let's take a look at oil. Oil has been getting beaten up here recently. Came up to resistance. It's in a downward trend. Resistance got hit, sold off. And I wouldn't be surprised if oil goes down and retests these lows. I'm not saying that's what I think is going to happen because I don't really have a strong bias on oil currently. If I take a look by category, and let's go to commodities just for a second. We've got oil here listed as a neutral reading, a +1 score in the EdgeFinder. What that tells me is nothing to do here, right? So not bullish, not bearish, but from a purely technical standpoint, lower highs, lower lows, daily charts telling us downtrend. Right? So path of least resistance, in my view, would be we see a retest of these lows. I am looking to potentially sell more puts on my ExxonMobil position. I sold some puts on Exxon. Would not mind if the market continues, if oil continues to go lower, could drag Exxon lower, which would be actually fine with me because then I could sell some further out of the money puts. Quick look at the Russell, which has been sort of in a range-bound market for the last few months, really. Has not quite taken out the highs here. I do really like the story for the Russell still. I'd like to be a buyer. I was looking at this level here, but I'm going to wait until the EdgeFinder gives me a positive reading. If we take a quick look at the EdgeFinder's current readings for indices only, let's just take a look at the indices. What we can see here is I've got the Dow Jones neutral, NASDAQ 1 neutral, Russell neutral, lots of neutral readings. That being said, seasonality goes from -2 to +2 in October, I do believe. So in a few days, many of these readings will probably change to be more positive overall. So I am watching this pretty close. I do think that we have the potential to see a pretty good flip across the board on a lot of indices in the coming weeks if we do continue to see the upward trends hold. I do like the indices long, just waiting for a pullback. There's nothing I can do up here. I can't chase that, and I'm not in the move. I wish I was. If I was in this move, it'd be a great trade for me, but I'm not. I can't short it. There's no reason to be short in my view. But if we get pullbacks, I'm a potential buyer if the EdgeFinder gives us a nice confirmation signal. EdgeFinder, October is also a bad month for stocks. Well, let's take a look. It depends your time frame. On the EdgeFinder, the last 10-year historical calculated average is about flat. So October is not a negative year. It's not a positive year. Negative or positive month. It is very confidently neutral for the last 10 years. But if we take a look into the end of the year, then you start getting into bull territory yet again, with the big upswings happening in November and December. That being said, remember, you got to be careful overvaluing seasonality. You can't overvalue any one indicator. I see it every single day, guys. There are so many traders who overvalue a single indicator. So they'll overvalue some technical price action signal, like a moving average cross, or a support level getting hit, or a pin bar, or a fair value gap, or whatever. Right? They're going to overvalue a singular signal that they're seeing in the markets, and they undervalue doing the due diligence to kind of combine many different readings. For me, in the fundamental side, I'm looking at seasonality. I'm looking at, commitment of traders data. I'm looking at the economic readings. And that's why, the confluence that we get from the top setups page is what it is, right? We want to get confirmation across many different signals at the same time in order to sort of improve the idea that we're taking a trade based off of. Does that make sense? So yeah. Very important that we don't overvalue one indicator. Seasonality is not the holy grail. Commitment of traders data, not the holy grail. Economic data in its isolation, not the holy grail. Nothing is the holy grail. If you want to make money in trading, you have to realize a very simple truth. If there was an easy indicator that told you what the market was going to do all the time, everybody would be trading and making a ton of money. So that simple truth out of the way, there is no easy holy grail crystal ball. It is about doing research. It is about putting together many different clues to make an educated guess of where the market's going to go. Hopefully that makes sense to everybody, but just wanted to put that out there because every day we got new traders who don't get that concept. Every day you get new traders. I was one of them at one point. searching for the holy grail in trading is a pitfall that just it's a rabbit hole that goes deeper and deeper and deeper, and it will not lead you to trading success if you stare at trying to find the perfect indicator. The reality is that if you want to make money trading, you have to risk really small. You have to have a good capital basis, make educated guesses based on many different strong indicators. For me, the fundamentals have been a game changer. But most people are afraid of economic data because they're like, that's too complicated, that's too tricky. But then all the smartest traders in the world use fundamentals. If you don't believe me, pull up an interview with like Ray Dalio or pull up an interview with hedge fund managers, and they're not talking about price action. They're talking about the macro. And there is a reason for that. It is what really moves the markets. And that's not speculation, right? That's not me making a guesswork. It's not making a conspiracy. Straight up, listen to big bankers who manage bajillions of dollars, and they're talking about the macro. It's what moves the markets. It's the most important thing. So anyways, S&P is still getting a neutral reading. If we take a quick look at the economic reads, so GDP growth is going to come in neutral after this data updates. So we're going to have one gray. So this is going to be gray, which is going to leave us with 1, 2, 3, 4 reds and 1, 2, 3 blues in terms of our fundamental analysis category. So not a strong decisive direction one way or the other, but you could say, okay, well, we didn't beat GDP forecasts like we have been. So maybe, that doesn't give us as much of a strong signal. Look at that, silver really pulling back here. Come on, silver, do your thing. I'd like to see it hold these gains. Maybe finish out somewhere in the middle of this wick would be great. Gold really pulled back here off of that. Take a look at the daily chart on gold. This thing's been a runaway train. Again, not one that I am long on, but silver has been the better call. Silver has moved a lot more. So if we take a look at this recent swing from the low up to this high point, that's an 18% move on silver. Take a look at gold during that same period. You're talking about a 8.5% move. So silver has been a monster. I switched over to I was long gold. I got trailed out of a profitable trade on gold, and then I switched to getting long silver, and that ended up being one of the better calls that I've had recently, which was just getting a nice long position on silver on this pullback. This was right around when I got trailed out for a profit on gold and decided I still like the trade, but I'm going to actually pick up long silver. And sure enough, silver's been making a killer move. This was an EdgeFinder signal at one point. It is no longer an EdgeFinder signal. It is a +3. Although, let me just do a quick check for myself here. I'm going to pull up silver's seasonality. The month of October is not a positive month. So we're already working against, here's another example of seasonality just not working out this month. Seasonality, 13% gain for silver in a month where I was expecting -2. Will we see a similar pattern next month? We'll see. Metals are super bullish right now. Yes, they are. They're crazy bullish. I do think that the metals will probably have pullbacks, but trying to bet on when that will happen is a fool's game that we have said 1,000 times on this channel, and people still fight the trend. People will be shorting gold continuously as this thing just rips to new highs. Guys, gold is having an absolute banger year. If we go back to the beginning of 2024, just as a quick reminder, this is why you don't fight trends. Look at this. Gold's up currently 30% this year. This is a boring metal that doesn't move that much on a percentage basis. Up 31%, let's call it. Absolutely crazy. The S&P 500 hasn't even gotten 31%. Gold has gotten 31% this year. And don't even get me started on silver, man. Are you kidding me? Silver is an absolute beast this year. Look at this. Silver up 35%. Just incredible. So when we look at these things, we look at like, have they gone too far too fast? The answer is you can try and take a stab at trying to short these things, but it has been a perilous journey to do so this year. If you fought the upward trend this year on gold, you've lost probably money. Hey, James, good to see you. Yes, good to be back. Happy to be back. And yeah, It was a nice vacation, but I'm always glad to be back on the charts. So definitely something to keep an eye on is the metals. We don't, for me, there is no shorts to take here. This is not a point where you say, oh, it's going to reverse from here. Maybe it does. But if you've been saying that on gold and silver this year, you've lost money perpetually. Like you've gotten smoked over and over and over. And I'm not saying that to insult or offend anybody, but you have to sort of like look at it and just say like, okay, if I'm shorting this rally, what the heck am I doing? The Fed's cutting rates. Economies of the world have been slowing. That's a bullish environment for silver and gold. That is not an environment where you try and bet the top is in for gold and silver, because if you've done that, you've lost a ton of money. Now, I am speaking with a little bit of hindsight, so let me be fair here. I'm speaking with a bit of hindsight. We didn't know for certain how much the Fed was going to cut rates, but it is very clear now in the last few months, the Fed has been very, very consistently wanting to cut rates. And we just see the market continuing to drift in that direction. So to me, the path of least resistance is further higher for metals, for stocks, and probably for bonds too. TLT pulling back a little bit here. This is, long duration bonds. Although I don't have a current signal or setup for TLT, I'll keep an eye on it. If it pops into the EdgeFinder's radar, then I will definitely keep an eye on it for sure. In terms of the currency world, euro dollar, sort of same trend, right? Pound dollar, euro dollar trend seems, path of least resistance seems to the upside. Dollar yen, this one's a little unique. Dollar yen, dollar Swiss. These are potentially actually like longer. If you're bullish on the dollar, if I was to get bullish on the dollar, the space that I'd be most bullish on would be the risk off currencies, shorting them, right? Like shorting yen, shorting Swiss franc. If I was to get long the dollar, but I don't currently think it's like I'm not seeing the signals yet. Like if you see a bottoming out on US economic data, like it starts to strengthen again, which, maybe is getting closer. The dollar yen might be a play that I like, or the dollar Swiss for that matter. But yeah, looking strong overall. The economy situation does not seem like, it doesn't seem like we're falling into a recession right now. And of course that can change at any moment, but you can't trade based on what's going to happen at any moment, right? Because it could be people have been calling for a recession for years. So the US economy does not show signs, in my view, of falling into a recession at this time. It doesn't mean that it doesn't have crack problems, but trying to say, oh, well, now's a recession time is a game that, again, can get you into a lot of trouble. We trade what's in front of us. Right now, economic data for the US is falling pretty decently, like falling into place decently. It's not falling apart, is what I'm trying to say. So what that means for me is pullbacks on the stock market or buys. If inflation continues to cool and economic data isn't as cool, a potential hedge is, again, playing silver and gold, the things that I've been playing a lot. So we will see. Anyways, guys, if you'd like to get access to the trades that we're taking, remember you can do so inside of our Discord VIP room. We'll drop a link to that. We'll drop a link to speak directly to a member of our staff. If you'd like some more information about the VIP room, if you'd like to get the trades that I'm taking sent directly to you, you can join up with a nice subscriber discount by sending a direct message to our support team who is standing by right now. So shoot us a DM using that link if you'd like to. We're going to take just a quick break here to thank our sponsor, and then our next show starts with Miko, Marco, and myself. We're going to be taking a look at some charts together, so stay tuned. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we are back. Sorry, guys. Give us just a second to rearrange the, there we go. What's up, guys? Miko, Marco, how are you doing?
Hello.
Hello.
Good to have you guys back on the show. And it's been a minute. I missed our segment last week just because doing a little bit of traveling. But we're back now and taking a look at the charts. I'm curious if we are going to start anywhere. I want to start with the dollar index just for a second to get you guys' thoughts. It's been a bit range bound on the daily chart, but I'm curious, maybe we'll go to Miko first on this one. Do you have any thoughts on where the dollar could be headed next? I know you were bearish on it for some time now, which has been a great call. Do you think it has more room to the downside, or is it starting to bottom?
I do think we've got more downside. I do think we've got more room. It's having such a tough time trying to head lower because we are hitting some high time frame areas of support. But my analysis stems kind of from the daily, weekly, monthly time frame. That's kind of where I get my narrative from. So I do think longer term, at least based on the technical analysis, there is a lot of room for us to fall into, potentially cover some of the moves that we've had in 2022. So I still think there's more downside, but price is finding it very difficult, meaning may push up first before we do have that follow through. But I'm still looking at least a push to this low here, which is around 99.6. So I'm still bearish on USD, but it's just been difficult to get into trades, especially with like euro and pound, because they're just a little bit awkward. So if dollar can push up, that would be great for me. Then I can find some more selling opportunities or buys for like euro USD, for example. A push like that would be nice, and hopefully a pullback in euro as well. So I think euro dollar's still got room to the downside, but yeah, it's very awkward to look for shorts at this moment in time.
Yeah, fair enough. I think being stuck in the middle of this consolidation is a bit tricky, and we'll see once it makes a decisive break. I thought it was going to break through the lows here around the 100.4 level, but didn't quite get there, and still sort of chopping back around. This, of course, has implications on like every market, whether you're watching indices or currency pairs or commodities. If the dollar, breaks these lows, metals probably go higher, other currencies probably really rally, etc. So we'll have to see how that plays out from here. Marco, what are your thoughts currently on the dollar?
Yeah, so for the dollar, just before that, Miko, I think your microphone source is on your PC instead of the microphone. So
is it? Okay.
Yeah, if you want to back out and come back in, Miko, just switch your mic, or you could do it at the bottom. Either way.
So for the DXY on the daily, it is stuck in that consolidation. It had a massive drop right here with some very nice bearish pressure, some very nice bearish legs, but now it's just kind of stuck in this flat consolidation. So I could not really make a decision. I could not really give you a bias. On the 1 hour, it's also stuck in just a flat range. So I would wait for a breakout to the downside or to the upside. I was expecting maybe a bigger reaction on that rate cut that we had. So with the interest rate, a trend did not start. It may start in the future. So if we can break out of these key levels, then maybe we can start an uptrend or a downtrend, depending on how the market will react. And are you surprised that there was no big reaction with the rate cut? I mean, that we didn't start a uptrend or a downtrend?
Yeah, that's a good point. I mean, they cut by 50 basis points, which was to some a surprise. I thought there was, myself included, I thought they were only going to cut by 0.25%. They cut by 0.5%, which I thought that would do a little bit more to the dollar index. But what it might have been telling you is that the market was sort of thinking we would get a big, heavy rate cut ahead of time. And if we had gotten a 25 basis point cut, what might have happened is you might have just started to see the reversal. So if you had seen, a 25 basis point cut, the market might have been thinking 50 and got it wrong. We saw that towards the Fed Watch tool, which tracks probabilities for certain rate cuts. It leaned heavily right before the rate cut into a 50 basis point cut expected. And what that tells you is that basically the market was sort of priced for a 50 basis point cut at that time. So I think that's why it didn't sort of have a big explosive trend lower. But now the question is, with the rate cut side of things, if we get more economic data, let's say a very weak NFP report like next week, or if you get that sort of environment, the dollar then could very well pick up a downtrend and continue. Because then it's like, okay, we're going to get rate cuts and way more rate cuts because the economy's starting to slide. I think now it's very much, coming down to like jobs data, et cetera. If we get strong jobs data, the dollar index might bottom out and find a low, but kind of comes down to the data on that front. In terms of price action signals, I'm with you guys. I think if we could see a break through this low, that might start a bigger trend lower. But to be fair, if we see, conflicting data and the market starts to rally, very well could be finding a bottom. So I'm very neutral with it currently. There's not a lot of setups that I can see at this time. I guess where we have seen some pretty big moves, I've been long silver. I'm not in gold, but I'm curious, Miko, what are your thoughts on gold or silver, either one?
So yeah, it's been pretty bullish with both of them. I've had a couple levels marked out with gold, but it just hasn't retraced enough for me. I remember we had the break of 25.30 around here. Then we had another break of this high as well, and gold was just ripping to the upside. So I'm finding it difficult to look for entries unless I scale right down to some lower time frames. I might have better luck, but it's still kind of just pushing higher. And again, this afternoon as well. So I think with gold, in terms of the technicals, it's just a very bullish market. If you're looking to trade it, you're looking to get in some pullbacks, shorting it, it's going to be very, very difficult. So in my opinion, if you're looking at this, especially in the lower time frames, break and retest can work very well in these conditions. And you're just looking to try and anticipate those higher lows because there's just so much momentum with gold. In terms of silver, we're seeing a similar movement. However, silver is coming back into like a big daily high here, so you might find a bit more difficult. But in terms of opportunities, I like silver because if we can get a strong break of this daily high, that opens up the opportunity for some more buys on top of that level. So I'm liking silver. I think gold might miss the boat on that one unless we go for a bigger retracement. If I can get break and retest on that and silver, that does interest me a lot. But I'm very bullish on both of them. Technicals look very bullish. So I'm expecting more of the same.
Okay, fair enough. And so, Miko, if you could try one more thing on your mic too, I think it might be your gain might be very high or something.
My gain?
Yeah, you sound good, but I think your mic is just sensitive right now because people are saying they can hear like a microphone noise when you hit the desk or something. I'm not sure, but just technical difficulties. It's part of the content creation component. Marco, same question to you. Silver, gold, metals. Any thoughts here?
Looking very interesting. Very interesting. Gold finally broke out on the daily, so that's good to see. At least it's moving. It was pretty corrective right here, so the technicals were telling me it's kind of exhausted, but now it's starting to pick back up again, and it's just no signs of slowing down on this daily chart. Silver approaching this major high, which is a bit of a problem in my eyes. So I do prefer gold because it's just kind of doesn't have anything above any interference. But silver is moving up as well. You could say it is reversing from this descending channel, which is a known structure in a high probability pattern where I expect the price to actually reverse from this sort of a structure when it's correctively breaking the lows. So they are connected. They're going to go up together. But I do think gold, in my opinion, is looking a bit more healthy because it's just no highs are there to stop it, if you know what I mean.
Yeah, that makes sense. And yeah, gold has just been on a recent basis, silver's looked a lot uglier in terms of a chart in my view. But the recent, Fed rate cuts you talked about triggering some trends. I've seen silver really change its tone because of the cuts, because silver and gold are both very sensitive to whether or not rate cuts happen or not. And silver is it's like gold. It's like, one thing I always hear people say, or I've listened to somebody say this many times, Bitcoin is like a chart that represents buying calls on on the NASDAQ. Silver is kind of like buying calls on gold. Now, when you buy calls, if the market doesn't rip or just stays where it currently is, you still lose money. So but if it goes up, you stand to make a lot more money, right? When you introduce options into the picture, part of the reason I personally dislike buying options is you have to be not only right in direction, but right in the timing. I personally love to sell options for that very flipped reason. You don't have to be right on either one. You can still, make money. But the point that I'm trying to get at is like when you go long silver, it, as you've mentioned correctly, it has a very high correlation to what gold does, but the magnitude of its moves is higher. The volatility is higher with silver. And so these moves on a percentage basis can be much bigger. So this recent push, I made this point just before you guys joined, this recent move on silver is about an 18% gain from the low to the high. And on gold, it's about an 8.5% gain. So you can see that the explosiveness of silver when you're right can be great. But ultimately, the price you pay is sometimes you get these really choppy environments. So yeah, it's tricky.
And how did you exit your gold position?
I got trailed out. So
Okay,
I
cool.
forget exactly when this happened. I think it was over here, unfortunately. But the good news is at that same time, I liked silver better anyways and flipped into getting long silver instead of gold. So I pretty much picked it up on the same day I got trailed out just because I still liked the setup, but silver I thought had more potential, and I was right about that. Where I've been wrong is I've been missing the indices, which is like the bane of my existence and the most painful thing for me to miss because I love trading them. So anyways, next topic, I guess, is currency pairs. So we've talked a little bit about the dollar and metals a good bit here. Miko, you first in terms of currency pair setups. Are you seeing anything on the euro, the pound, the yen, wherever you'd like to pull up?
Yeah, so at the moment, I am short on pound JPY. I've taken a short on Tuesday. Yeah, it was Tuesday. Off this high. So I'm pretty bearish on the yen pairs. I'm looking for some big reversals for them there. Most of them are approaching some big highs on the daily, weekly charts. I'm looking to anticipate a bit of a reversal. It's more of an aggressive position, but I'm not expecting us to break high. If we do, then I might be in the wrong direction. But the idea is that we've had such a big sell-off a couple of months ago, and I'm looking for a continuation of that. And now that we've hit back at a strong area where sellers have stepped into the market previously, I'm looking to see if we can see that reaction again. A lot of the yen pairs are approaching some of those levels, Aussie yen as well, hitting some nice heights there. Again, I'm going to just stick with pound yen. Not going to look to trade all of them, but they're all coming into some nice areas. So I'm being very bearish on the yen pairs. I'm just picking which one looks the best at the moment. Pound yen tick my box as well. So I'm currently nursing a trade there. I'm also very bullish on the euro, on euro USD and the rest of the majors as well. But I need some pullbacks with these guys, and of course, dollar's been a little bit choppy for the past few days, so it's been difficult to get into entries. But euro, I like the longs. Pound USD, I like the longs as well. And the USD is another one which I like the longs, but I'm not too sure if I'll get the pullback after. I'm looking for the retest of this level here on the USD around 0.62. Pound USD, I'm looking for the retest of the high there as well. Not quite there yet. Euro, I don't have a clear setup yet. I like the low back down here, but I'm not too sure if we'll get the pullback there I'm looking for. So my main kind of focus is shorting the yen pairs and looking to see if I can get some pullbacks on some of the majors.
Okay. Yeah, no, I kind of like that. I think some of the yen pairs could be, especially the higher sort of risk-on currencies like pound and euro, could actually be some interesting setups if you get any sort of like if we just take a look at the index, for example, the NASDAQ, right? This is a good indicator of bullish sentiment in the markets. Same thing with Bitcoin, right? These things have had really good runs. And it is natural for, when people get very overly bullish for a time, for that to sort of correct. And so when we go to the yen currencies, I kind of always think the same way. Pound yen and the NASDAQ have some similar characteristics. They both typically rally in good times and sell off hard in negative times. I'm a little bit cautious on the indices myself still. And so when we do see them all rallying, if I'm going to look in the currency world, my bias would probably fall in the same line of like, okay, maybe I want to look to maybe get short some of the yen crosses that I think may be a bit overextended, especially on economies that I think, may roll over a little sooner than others. But yeah, no, I like that idea. Pound yen, very interesting chart. Same thing for you, Marco. Do you have any currency setups that are looking good to you?
Yeah, so Aussie Japanese yen is looking extremely clean,
Okay.
too short actually.
All
So it's
right.
producing a very high probability pattern, which I rarely see. This very clean ascending channel, and it's breaking the highs and retracing all the way from here. 1, 2, 3, 4, 5, 6 breaks of the highs, no breaks of the lows. And usually you get a big downtrend after this sort of a formation. So I will be very interested to look for a push down and then a sell setup. It'll just be, it'll have a very high profit expectancy, and these setups usually have a high win rate as well. EJ is telling me the same thing. It wants to go down. At least the technicals are telling me that. It's just breaking these highs very correctively and retracing, starting to print some bearish pressure, but it's not enough. It's not convincing enough for me to look for a short just yet. So I'm being a little bit more patient, looking for a drop. NJ is not looking as clean as the Aussie and the Japanese yen. It is correctively breaking the highs, but it's a bit more of a messy structure, so I'm not seeing that high probability pattern. But I am expecting for it to drop down as well. So we'll be looking for shorts when I get the signature, when I get the confirmation. Look for something like this. Dollar pairs, Euro US dollar for me is pretty flat in this area, not producing any high probability patterns. Aussie US dollar is starting to print some bullish momentum in this very short term price action. So if this can continue going up, I will be looking for buy setups, but my confidence is not that high, to be honest. So being careful with Aussie US dollar. Pound US dollar is looking pretty indecisive as well. You had a big drop down after this sort of a large ascending channel, but unfortunately it could not be sustained. So it started to print some large bullish momentum, which makes everything a very indecisive, I would say. So my main focus is going to be NJ, it's going to be EJ, and it's going to be the Aussie US dollar on the watch list. That's the game plan. So today, maybe we can get some nice short setups on the JPY pairs.
All right. Yeah, no, I like it. I think I do tend to find myself in the same camp, looking for maybe some sell-offs and yen crosses for some good upside. Last topic for us is Bitcoin, which I do actually think is becoming more interesting again. We're getting close to the top of this channel that us three have been tracking for many months. Bitcoin, of course, moving with the indices as pretty much always. It's up with the NASDAQ, up with the S&P. The question is it going to get the fuel to actually break through these highs and really make another explosive move? In which case, obviously there's a tremendous amount of upside if you catch one of those big pushes. But where are you guys at with it? Mika, are you watching Bitcoin? Would you be a buyer if it started to break that? How would you approach this?
So yeah, if Bitcoin does break out of that channel, then yeah, I'll be very, very bullish on Bitcoin. But my mentality or my expectation is that I'm expecting Bitcoin to reverse at these highs until I'm proven wrong, basically, because price has been doing that so well so far. So as we approach the high here or the high end of the channel, I'll be expecting Bitcoin to find some resistance and see some downside. If we do get the breakout, then I'll see what we can do in some retests, because if you do get a breakout of this channel, then I'm expecting not necessarily similar price action to this, but I'm expecting to see some follow through, because this looks like it could be a major correction of that big bullish move. So if it does break through the high, break through the channel, then I do expect us to rip to the upside. So if that's the case, I'll be looking at breaking retest and trying to look for some pullbacks on the way up. But my kind of thought process right now is I'm just expecting Bitcoin to find a high somewhere and come right back down, whether it's at the resistance here at 65K or slightly higher on 66, 67. I'm looking for us to come right back down to the lows. So that's what I'm expecting with Bitcoin.
Okay. Yeah. Same question to you, Marco, in terms of Bitcoin. Feeling bearish up at these levels or looking for a breakout?
So I've seen a funny comment. It's making knees and toes pattern. which I've never heard of. Basically, Bitcoin on the daily chart, I'm gonna stay patient until it breaks some of the key levels. Of course, you have the trend line. That will be an interesting level for sure. So around here, but I think a bigger resistance will be this high and this high as well. So if we can break out with some nice momentum, close bullish on the daily chart, something like this, nice clean close, that would be very bullish on Bitcoin. Currently starting to print some bullish pressure as well on this short term, but again, it's not convincing enough. I need that force like we saw right here. So this was a big leg, this was a big leg, and I would say this was a big leg of momentum as well. If you just compare these legs to this one doesn't look that bullish. So I'm waiting for that strong, major, massive bullish momentum, and then we will reevaluate. And I had a question. So do you guys ever look at news on TradingView? Because like you can have these boxes on the bottom, and I've found that it's pretty interesting because they have some high impact news and then they have some low impact news on there as well. So it's kind of tough to filter them through. But I just wanted to ask you guys if you rely on those or do you look at, let's say, some other calendars?
Miko, you can go first if you want.
No, to be honest, I use my FXbook economic calendar. So I keep all my news over there. I think it could be interesting because you can like pinpoint the news specifically and see how the market reacted. So I think that's something I can actually look into. But no, I just keep all my news over there and then focus on the technicals on the chart.
Yep.
Yeah, I think in terms of those chart indicators, it could be cool to like see where it lines up in the charts just for like a convenience thing of like, oh, this is when that news hit. But I usually just find myself looking at like Forex Factory or FX Street just to pull up like the news. But yeah, I think it is convenient to have it on your charts just to see when that news impact happened. But yeah, just a different, I guess, just a different way to interface and look at like when data points are falling and you know what the values were. TradingView has also, there's ways to look at like news feeds just to read articles and stuff. If that's something you're interested in as well, that is really convenient just to have on your screen in case you want to read into what's going on. Like I know the Chinese stock market, if we can show my screen for a second. I don't know if you guys looked at this. This is part of the reason why gold and silver are rallying so hard.
Oh my God.
The Chinese stock market is up a whopping from the lows here, like 20% almost on the last few days. So it's been crazy, but it's they just announced like a big plan to do a big stimulus thing to try and improve their stock market and economy, which has been in a really rough spot. So we'll see how that plays out. But clearly the market thinks there's some potential there for a bit of a turnaround story for the Chinese stock market. And because China is such a big global economy, the demand for metals and things like that could also be helped. I know oil had a nice recovery going, but it's fallen apart there. If we take a look at like copper has had a huge jump. This is of course a raw material that China, being such a big economy, would demand heavily if their economy starts to roar. So things like that. Definitely moving in line with China today.
And I have another question. So I think in July there was a big drop in the JPY pairs. Like the Japanese yen gained a lot of strength, and there was news connected to the Bank of Japan. But how would you find that, let's say, on the internet? Would you go to Forex Factory or would you go to some news articles?
Yeah, it's kind of tricky. It's a lot of reading, like especially with the central bank stuff. You have to kind of like watch and read a lot to keep up with it, because if you're looking at this chart, it's not like a data point, right? Like a data point, like jobs data points or interest rate decisions. Those are like singular points that you can kind of just understand. And that's where like the EdgeFinder helps you a lot, because that's really the data points, having them all visualized and mapped out is really easily. But then there's the component of like reading about or listening to what's happening with the central bank. The Bank of Japan has wanted to raise rates there, which of course raising interest rates is going to cause their currency to strengthen. But it's also in an environment where other central banks around the world are looking to cut their interest rates. So that dynamic makes very strong currency trends. So yeah, the Bank of Japan has been an interesting one to watch this year. They've really started to show signs of wanting to raise their interest rate, and we'll see where that goes.
Yeah, that is interesting. Very interesting.
Yep. Well, guys, thank you both for joining on the show today and helping us out. As always, for those of you guys who are listening, do us a big favor here in the A1 Trading Show. All of our guests, we want to thank for taking their time to come on and share free value and education to traders around the world. If you guys could do me a favor and make sure to go subscribe and follow, support Miko and Marco, that would mean a lot to us here at A1 Trading. So we're going to drop the links here in the chat to check them out. There you go. Miko and Marco both have their own YouTube channels. Please go find them on socials and give them a follow, send them a DM, whatever, follow their Telegrams, all that good stuff. Just support them for coming on the show. Guys, thank you very much. And we will see you back next week.
Thank you.
It.
See you next week. Bye-bye.
See you guys. All right. Somebody made a comment. I thought this was funny. I might have missed it. Oh, yeah. Be honest, Nick. You're only cautious about the indices because you didn't take a position. Happens to us traders all the time. Whew, you're kind of true. You're kind of on it with that. I am feeling cautious about the indices, although I will say just objectively, whenever the market rips higher on indices, like whenever it's just like pumping up and up, I get a little bit cautious. I start trailing my stop. So even if I was in a position, you are right. I wish the market would fall so that I could get some long positions going. Don't get me wrong. I won't avoid it. You're kind of right. But even if I was in long positions and if I kept my longs from, let's say I bought it right here, right? If I was long right there, man, oh man, I would still be wanting to trail stops pretty tight because I'm thinking, okay, when you get a big stretch like this, the market naturally moves in waves. So when it's making a big pump up, we don't know where the top of that pump is, but we know that there's probably going to be pullbacks. And so I'm speaking to myself and others who may feel some FOMO, whether you're watching gold or currency pairs that have made big moves or silver, S&P, whatever. If you're looking at these charts, you can't beat yourself up for not being in a trade too much. Like I said, I wish I was long the S&P and the NASDAQ, but I'm not. So what do I do about it? What do you do in that situation? Well, you don't short, right? You don't bet against it just because you want it to come down. That's just foolish. But you also can't chase. So in my perspective, I'm a bit cautious about the indices, but I'd like to be a buyer if they pull back for me. So I just think that's worth mentioning. If we get a pullback, I'll be watching it. If we don't, I missed it, and that's okay. I do have some positions on. Look at this silver completely reversed. That's no fun because I was long, or I still am long silver. If we break support here, I'll take profits on this move, but I would ideally like to see it hold. Seems like the stronger economic data points that came out this morning, not particularly positive for gold and silver. We had GDP numbers come in at 3%. Unemployment claims came in lower than expected. So, and durable goods saw pretty much good economic data this morning, which is pushing metals lower. What advice can you guys give me? I'm very bullish on NASDAQ. Only I have 3K. Leveraging 20x is on the long term very expensive. What can I do? Don't touch leverage whatsoever. It's foolish. It's just silly. Don't touch leverage because if you're right, you make a lot of money. If you're wrong, you lose everything you have. So it's not a good exchange. Be more patient than that. If you have a small trading account, accept that you have a small trading account. You're not going to make big profits on a small trading account. It's just the reality of the world. That's not how the world functions. We all know that in our day-to-day lives. Why would it be different in trading, right? You don't get rich by not putting a lot of skin in the game, right? You have to expect, modest, slow and steady gains if you have a small trading account, and that's okay. Because if you're long, if you actually have some grit to you, then you accept that and you say, okay, well, I'm going to build up my trading account by working an extra job, depositing more, building it up, but don't mess around with leverage. That's how you blow everything you have in your account. So that's the first off. Second off, if you're looking at the NASDAQ and you want to get long the NASDAQ, first of all, hopefully you have a system and reasoning for doing so, not just, oh, look, it's going up, I want to be part of this. Because this thing you guys have to expect at any moment, the NASDAQ could have a 20% drop. Here's an example. We saw this drop from peak to trough. This was a 17% drop. If you go back in time, you look at some of the other drops. Here's this drop, which was a drop of 38%. So yes, the NASDAQ looks very, very strong right now. And I am bullish. So I'm not saying like, oh, I'm going to short it. But just because it's up does not mean it's going to keep going up. It could at any point start to see a repricing, a pullback, etc. So just be careful. Just, don't mess around with leverage. Nobody's that right about the markets to really employ massive leverage. It's like playing with fire. You're going to get burned if you keep playing with leverage too much. Anyways, guys, we've got our next show guest taking over for a little bit. We got Kenzo taking over the stream here in just a moment. So stay tuned on that. Kenzo's going to be joining here in just a second. Before I exit, if you guys would like to get access to the EdgeFinder, remember you can try it out for 30 days. We'll drop the application link in the chat right now. It should be in the description or pinned comment if you're watching on Twitter. And Kenzo is going to take over from here. So stay tuned. Stream will be right back after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Good day, guys. I hope you are doing great. I even forgot to share my screen. Let me share the screen. So on the comments section, you can just let me know which pairs do you want me to check. I can already see the GBP USD. So yeah, I will go straight to that. I was actually trying to reset my charts. Silver, okay, gold. So I will start with DXY so that we can understand what's really happening with the market, especially USD, you see. So at the moment, let's see what's really happening on dollar index. Yeah, let's see. So you can easily see that, yeah, the market is still actually on that nice downtrend structure. Let me change this colors. We were on this, or let me just clear everything. I can read through this. So we are actually on a very nice downtrend structure. So what we want from this dollar index, it helps us to understand if maybe the economy, especially US economy, if it's performing very well or not. The reason behind that also is 80 or 90% of the pairs that we trade, they all actually go with a dollar. So if you understand the state of dollar or the strength of the dollar, most likely you will understand other pairs, Euro USD, GBP USD, and that is actually something that we need to understand. So at the moment we are on dollar index, we can easily see that yes, the market is still actually on this nice downtrend structure. We can say we come in from this. Okay, let me change that color. Yeah, so obviously this is a very proper downtrend structure as we come in from this uptrend. You can see that we were on this nice uptrend. Now we are going down. So which means most of the pairs that are going with the dollar, most likely they are going higher. Yes, along the way they might reverse here and there, but we can see that the market is actually going lower and lower. So which means the dollar is losing that momentum. I hope that makes sense. So where we are now, or let me just use maybe 4 hours time frame so that everyone can understand what it's happening now. So since we had that breakout, you can see that the market is slowly going down. So the market broke out around this level. So we can see that we had this consolidation structure. Also around this level, we have this consolidation. Another one, it's here. It's where actually the market is. So once the market opens in 9 minutes, maybe we'll see a nice move. But beside that, we can already see that the market is actually consolidating. But if we compare with the area where the market broke out, yes, we are actually going down. So which means the market is actually losing that momentum. And that is actually something that we're supposed to understand. You see? So yes, DXY, it's actually on a down trend. We are down trending. So let me just draw this as quick as possible so that you can see what's really happening here. The first one, sorry, not the last one. It was this level. Copy, paste. So at the end of the day, we will be drawing our resistant line like that. I hope maybe that makes sense. So this is what we have at the moment. So at the moment, we can see that the market is actually consolidating around this level, but the overall structure is actually a downtrend. Once the market breaks this support area, or once the market is done with the consolidation structure, we will see the market continuing to go even lower. I hope that makes sense. So yeah, let's see other pairs: USD, JPY, gold. Sure, Kenzo, how are you, man? Paul? GBP, okay. I think we'll start with GBP USD. So let's see. GBP USD. So on GBP USD, I think the structure is quite straightforward. Actually, guys, I was playing around with my my trading view, so I was trying to change the colors. So on GBP USD, I think you can easily see that the market was, or it's still on this nice uptrend. We are still going even higher. And where we are, we can easily see that, yes, the market is aggressively pushing to the upside. Why? Because the dollar at the moment is a little bit weaker. We saw dollar index, it is still on that downtrend structure. So it means it gives enough chance for GBP to shine, especially if you did check last week. GBP did not really cut, also Bank of England, they did not really cut their interest rates. And if we check with that, dollar or USD or Federal Reserve, they did cut their rates actually last week, and it makes British to be a little bit stronger against the dollar. And that makes sense because we can easily see that the market is still willing to go even higher, or we can say it's still on that nice uptrend. The bullish momentum is still way too strong. So now this is what we have. If we go closer, we will see that already the market gave us something there. We can call that our resistance area. So I'm expecting the market to reach this level, guys. I'm expecting the market to reach this support area before going higher. Yes, something like this. Someone can say, Kenzo, I also see something like this. I also see that, but most of the time, the market might end up respecting this support area and then going higher. So we have to differentiate that. So this is not really that strong, that much, but yeah, you can still draw that. But at the end of the day, it's quite steep, so the market won't keep up with of a trend for quite some time. I hope that makes sense. So what I'm expecting here is to see maybe the market might play around, but I think we need to have a proper touch on the support before we push to the upside again. I hope that makes sense. So let's see the other one. Let's check the other one. Silver, gold. I think I will finish up with silver because I think I never did much of the analysis from silver. So now let's go straight to gold, Euro USD. So we'll be going straight to that. So I think my network is a bit slower, guys. Sorry about that. Or maybe it's this platform that we use. So on gold, what's really happening? The market is still actually going even higher. But I see an aggressive reversal. So I was expecting to see the market going higher and higher. Yes, it's like the market is now trying to reverse. So this is what we had. You can see that the market is actually on this nice bullish move. And where we are, we can easily say the market is actually overbought, but that doesn't really mean that the market won't continue going up. So you can see that we are coming from this nice bullish move. So it's always a good idea to follow the trend. So let's see where the market is. If we check here, we can easily see that the market actually broke out of this resistance. Let me take that one out. We were scalping that. We did smash that. So you can see that the market here, this was a very proper resistant area, and the market actually broke out. So the market broke out here. We're expecting the market to continue going even higher, but it seems like the market is trying to reverse. So yeah, I can say, you know what, we can't draw something like that because that is quite steep. So I will actually rely on this horizontal support and resistance. So now the market seems to be reversing there. But I still believe that maybe we'll see a nice push. Remember, in the Middle East, there are some tensions here and there. But I think maybe this reversal came after they were talking about 21 days ceasefire and stuff like that. So why, if the tensions are going to go lower, it means that we will also see gold going even lower. I hope that makes sense. So at the moment, yes, everything seems to be in favor of gold because USD, they're cutting the rates. Everything's just going down because the dollar is getting weaker, and that is actually good. And also tensions in the Middle East, they also push the market to go even higher. So that's something that we see. But be extra careful because if you check, technically, this is actually overbought. So which means anytime the market might reverse to this area or anywhere, but at the end of the day, at the moment, we are still on that nice uptrend structure. So we're just waiting for a proper reversal. So let me check another one, GBP CHF. I will check that, Euro USD. Let's see, GBP, okay, Euro USD. Let me see other ones. Gold, I'm on gold, Nasdaq, JPY. So let me do the ones that are very closer, then I will check the other ones which are not here. Then we'll actually cover those pairs very quick. So now we are actually on your happening. I think my network, but it's not really my network. It's quite slow. So what's really happening? We can easily see that on US data, guys, we are coming from this nice proper uptrend structure. You can see that the market has been moving like this. So where we are actually at the highest level. So there is enough chance that the market can actually reverse. But things are looking good. We can say the stock market is quite strong at the moment. So there is some serious chance that we can say maybe the markets will keep going higher. But technically, it doesn't look like that. So let's see. Let's draw our support area. If I draw something like this, you will start to understand that we are actually on the highest level. So you can also see that if maybe we can mark this as our potential support, our previous support, the market used to respect this level. So now the market actually did what? The market broke out. So we expect to see a continuation of this nice bullish move. So we can mark this as a potential resistance. It's actually a resistance. If the market breaks out, obviously we will look for that buy, but we need to be extra careful because we are actually on the highest levels. So anything can happen. So let's mark that area so that we don't really forget about that. Now the market opened, so we will see what will happen. So another area here, I said another idea will be if the market reaches this support area, then it's where we can actually look for a proper buy before we actually go to the upside. But at the moment, it seems like US state is still playing games, so we'll just have to wait here and relax. So Nasdaq 100, let's go straight to Nasdaq 100. I will check your comments, guys. I will check your comments. So Nasdaq 100, yeah, this thing is not performing very well. So on Nasdaq 100, we can see that, yeah, we did actually smash this one, but we were coming from that aggressive sell that we had a few weeks ago. Then the market started to give us some serious, obvious moves. Then the market was just consolidating along the way, but likely enough, the market started to break out. So where we are, we can say the market is now giving us some very proper and nice moves. After we got the rates cuts, the market was not really moving that much. So now I'm expecting to see maybe a proper reversal around this level. If it reverses, obviously, we'll see maybe the market trying to touch this level, then we can jump on the market again. Or maybe the market might just try to consolidate around. So this is not really confirmed resistance. We can say it's a potential resistance. We can just mark that level. It's not like the market already respected that. So it's just one candlestick. So we'll just have to wait and see what will happen next. But the overall structure, yes, we are still very bullish, which means we are expecting to see a continuation of that buy. So let's check the other ones. JPY, GBP, JPY. Stop spamming weirdos. Let's see. Euro USD. Let me check Euro USD. Nasdaq is reversing, guys. Let's see Euro. Euro USD, what's really happening here? I think this is also quite straightforward. We are coming from a very, very aggressive sell. I think it was around these levels. So I was still trying to change my stuff before we go live. So you can see here we are coming from this aggressive downtrend structure. This was a proper downtrend structure. Then after the market broke out of this area, so we expect the market to do what? To continue going up. And it makes sense because since we broke out here, some they can say, Kenzo, why don't we use something like that? It was inside our trend, obviously. So my trend will start once we break this trend. So we'll start to go up like that. But at the moment, I can say maybe something like that, it's fine, but it's still quite smaller. So if we go closer, we will see that actually the market is actually consolidating between this resistance and support area. I'm still expecting to see a nice push to the upside. But at the moment, it seems like the market is still respecting this resistance. If maybe the market tries to go even lower, that is going to be a very good opportunity for us to look for that buy. But at the moment, I think it's way much better for me just to wait as we are actually on a wedge structure. So if the market breaks out, that will be very, very, very good. And I think everything at the moment will favor Europe, especially if we look at that on the rates cut side, because cutting the rates makes the currency to be weaker. So at the moment, I'm still expecting to see a nice continuation of this uptrend. But at the moment, I don't really see any opportunity there. So another one I think is going to be GBP, JPY. I'm trying to be as quick as possible. GBP, JPY. I think we have some economic news, guys, right? I think we have some economic news. So DXY. Okay, I'll also check DXY. So now we are on GBP, JPY. Let's see let's check this on a daily time frame. I think these moves, guys, they are like quite aggressive. The moves here are quite big. So on a bigger time frame, they are visible. But let's see. On a daily time frame, you can see that we actually have this level. Let me clear that. So from a 4-hour time frame, we can say the market, yes, it was coming from this nice uptrend structure. We had a nice breakout. The market started to go lower. And at the moment, we can say the market, it's actually on this sort of a ranging structure. The market went up, down, up. So we expect the market to go even lower. But we need to be extra careful because we don't really understand where or which structure the market is trying to respect. Because if you check nicely, if I can clear this, we have also this daily time frame structure, which makes sense. You can see we have these areas and they actually did connect very nice. So which means maybe the market will be waiting for this outer area. So which means now we have two options. Whether we have to buy once the market is here, if it bounces back, or if maybe the market breaks out of this resistance area. Then for us to look for that sell, it means we have to wait for the market to break out of this resistance. Then we can say, you know what, everything that we had here, it was broken out. So which means we don't really have any choice, and we are just going to continue going even lower, because previously it was like that. I hope that this makes sense. So at the moment, we're just waiting for this to structure. So I think the market might end up breaking out of this resistance and continuing going higher. If not, it means the market will be trying to retest around the support area. But if you check nicely, this support area, it's quite stronger, and we can see that since 20 or that support was still actually there, you see. So yeah, let me check other pairs that I did not really check. AUD, DXY, NZD, GBP, JPY. Okay, I see the ones that I have very quick. I think I'm not gonna able to cover everything at once, guys, but I will just try my best to cover as much as I can. Yeah. Now we are on this nice structure here. I think from my side, you can easily see that the structure is actually coming from a very aggressive downtrend structure. That is quite big, actually, from also this daily time frame. So I think I can try to draw something from, okay, I think since I already see what's really happening, let me just go on a bit reasonable time frame, which is going to be a 4 hours time frame, so that I can draw from what I see. So I will try to connect few areas here, this, and I will see where this thing ends, because I see something like that. So obviously the market has been moving like this. Maybe this is our new breakout. Let's see what's really happening. Let's see. Yeah, this already, you can see that we are on a downtrend structure. So, sorry, we're coming from a downtrend structure. We are no longer on that, because we can easily see that the market actually broke out of our structure. So down below here, I'm not going to draw much, but you can easily see the structure. So I will just go to the current structure. So once you have a structure like this, it doesn't really matter what's really happening, what happened before. We want to know what's really happening, like what will happen now. So I will mark this area as where the market broke out, and it makes sense because the market has been respecting that level. So our Asia, we missed a very nice buy there. So that is going to be the potential resistance. We can easily see that the market actually respected that. And when we check, the market was respecting this level. So there is a proper support. So the market retested, and already the market is on its way towards this resistant area. So should we jump in? No, we can't. At the moment, it's not really a good idea. So I think if the market breaks out of this area, we can look for another buy, or maybe the market will give us another chance by playing around this area. If it bounces back again from this support area, then we're not going to miss that. But at the end of the day, we are coming from this nice downtrend structure, which means the market, once it breaks out, the market is actually trying to show us that it's time for the market to do what? To continue going even higher, which means we are now on an uptrend structure. You see, so if you draw something like this here, I don't think that will be valid, because that is quite steep. Plus, you were still inside our downtrend structure. So your trend, it's supposed to start here. I think we are going to push like that. So at the moment, I don't really see any opportunity until we break this level. or maybe once the market bounces back. So I hope that it's loud and clear. Let's check the other one. Let me see. I'm trying to check which pairs do you want me to. Oh, I see. US oil, YTI. Let me check YTI. What's really happening on YTI? I think we did smash this one. Actually on a very nice downtrend structure for a while now. The market has been respecting this. So we can see that we have a proper sell. Plus, these areas, it's where the market actually respected. You can see, and the market went there to retest there. Then we jumped on that sell. So I think this one is quite straightforward. But be extra careful, guys, with this type of moves, especially because this is quite low. Once we reach this 60 something, that oil might recover very quick, especially if you follow OPEC countries. They said they will be actually cutting the production of oil, so which means that will increase the value or the price of oil, right? So which means anything might actually happen. The market might touch this support area or it might continue, but at the end of the day, the market will end up going even higher, especially with the Middle East tensions. Something might happen, so be extra careful. But this is a actually the proper downtrend structure, and it's a good for people who are looking for those sells. So Nasdaq, please. I think I did check Nasdaq. USD JPY. I think I did not really check USD JPY. I'm sorry about that. I'm trying to check almost all of these pairs, guys. So if I did not really check something that you said I should check, I'm very sorry, guys. We still have next week. We will check them, or someone maybe will actually check that pair. So USD JPY, I think this is quite straightforward structure. The market is coming from this proper aggressive uptrend. You can see that the market was going up. Then we had this nice breakout. So I'm expecting to see a continuation of the sell. You can see this was an aggressive uptrend and for quite long. So now it's actually a very good time for us to look for that sell. And the market it's actually agreeing. You can see this trend started like way since 20, because JPY rates were quite low. Now they're trying to increase their rates quite slower, and at the end of the day, that will make JPY to be stronger. I hope that makes sense. So and now this is what we have. The market broke out here, so it means we have to know where the market will give us those sell positions. So as we have a nice breakout, that's fine. The market went lower. We can mark this area, but now we have 1, 2, 3. Do you see that? So these areas connect very nice. So at the end of the day, they are going to give us something like that. Do you see that? So it means we have to mark this area with a proper downtrend structure. But don't forget to also mark your horizontal supports, because most likely the market will end up respecting those. So something like this, you see. So mostly the market will end up consolidating around these levels, but at the end of the day, the market, it will be going down. So let's draw these areas so you can make this very bit shorter. So this is what we have. I think we are on a very proper sell opportunity on USD JPY. Let's go on 4 hours time frame. I think something like this can actually work very nice. But I'm not saying just go jump there and sell, but this is what I see at the moment, as I expect to see a continuation of this sell. So yeah, I think the market might actually move like this if it's going to respect our downtrend structure. So at the end of the day, we are going to have something like that. So another pair, let me see. I hope I'm not eating other guys' time or other people's time. Okay, thanks. Well, other personality. The dollar. So speech over GBP, USD, gold, Euro, CHF, Euro. Okay, let me check Euro, CHF. I think I did not really miss other ones. Euro, CHF. Let me check Euro, CHF. Euro, CHF. I don't think I have that. Let me try to add that as quick as possible. CHF. CHF. Let's see what's really happening. Okay, it seems like it's on a very aggressive sell. Let's see. I see this area here. I think we are on a downtrend structure. It seems to be something like that. Okay, so let me just confirm this nicely on a daily time frame so that I don't really get it wrong. So the overall move here is a proper downtrend. So it means CHF is quite strong. So what are we going to do? Just because we are day traders, obviously this was going to be an uptrend because we are day traders. So this was going to be a downtrend. So now I understand where I should start my trend. So something like this, I think is going to be proper. So let me go back on my 4 hours time frame. So sometimes when you draw the trend lines, you might get confused if you just use quite bigger structures. Oh, I think, yeah, my network is quite slow. These things, they take time to load. So you can see that the market was uptrending until we had this breakout. Then the market tried to push back again there, but at the end of the day, the market is still going down. So let's check. Let's check. Let's remove this. I did this link like for a long time ago. So let's see if maybe we can get a proper trend. I think there's something like this. I think the trend is very short. So on this one, I think we have something like this, as I'm actually looking for this touches here. So yeah, the trend seems to be changing very quick. So it seems to be a breakout and the market might continue to move like that, but we can mark this area, something like that. The market might consolidate and start to go even higher, but we are coming from a very nice downtrend structure. Or maybe let me mark this area. I think I'm over using the time now, so I think something like this. So anyways, thank you very much, guys.
Hey, Kenzo, we appreciate you all the help you gave us while Nick was gone. So thank you very much for all that.
No, thanks to you too, man, and also your viewers.
Yeah, and I'm sure we'll probably see you tomorrow for your Friday normal spot, and we're probably going to get back to a regular schedule now that Nick is back. But guys, I've been putting Kenzo's link in the chat, so make sure to go subscribe to him. He's been an awful lot of help while Nick has been gone, and he is full of trading knowledge, and he's got more content that he doesn't have here when he's on with us. He makes his own, so go subscribe to him. And Kenzo, we'll see you next time.
Thank you very much, man.
All right. Okay, guys, we're going to move along. We have a guest that we had on last week named Cameron. He's from the Traders Network Club. We were excited to bring him back on. So we're going to have a segment with Cameron next. So stay tuned after this, and then it'll be all his.
If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EdgeFinder. The EdgeFinder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EdgeFinder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EdgeFinder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EdgeFinder today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream.
All right. Good morning. Good morning. Welcome back, everybody. Good to be back. Thank you, Chandler, for having me on again. I was here last week for my first time. So if you guys don't know how I like to trade, you're going to find out today. I like to use a lot of price action. So if you're into price action and ICT concepts and market maker models, then I'm your guy. Okay. So I do trade Forex. We have been putting some trades on this morning. So let's take a look at some Forex pairs here and kind of just give you some breakdowns, analysis on these models that I'm looking at to be trading in these structures. Okay. Go ahead and just pull up the comments here as well. All right. So let's take a look at the US dollar CAD first. And what I like to first do is I like to look at the higher time frame just to get myself, a bias of the external draw. And looking at this US dollar CAD, sorry guys, I'm just woke up with like a sore throat here, so a little sick. Just bear with me. Looking at the external model on the US dollar CAD, we can see that we've now had a run of internal liquidity. So let's first take a look here and see what we're seeing here on this US dollar CAD. And what we're seeing is a range bound support and resistance. Support is our sell side range, and our resistance is our buy side range. Okay, that's where buy stops is resting. Support is where sell stops is resting. So when we look at this, we have this expansion move, right? What do we first see here? We first see this accumulation. Let me go ahead and change this color. Let's do like pink or something. We see accumulation. Then price ran up, took out these internal highs. This was a manipulation. This was a manipulation thinking that retail traders were going to buy to this external. And then we see this expansion move to the downside. So here we have a accumulation, manipulation, and now we're starting to see a distribution to the downside. Where would price be distributing to? Well, price would only be distributing to where rest and liquidity is at. So where is the rest and liquidity? So looking at the US dollar CAD, we've been taking sells. And what we first indicate here is here's our buy stops swept. Then we have the distribution, which create the market structure shift. We're now reversing to areas of rest and liquidity at sell side. Now we have to identify where is that rest and liquidity. Well, here you can use this price leg, this move right here to the upside, generate all this rest and liquidity here. Okay. Now this is, I'm looking at the weekly. So let me go now and zoom in a little bit more so you can see. Go into the daily. So there's your market structure shift. This is a weekly order block. So let me go back just to show you why I have that lined up. This was a weekly order block. Reason is, here we had this accumulation, and then price expanded out of this area, right? Create this area of resting sell stops in this area. So what happens is price came back to this weekly order block and respected it as support. This is why I'm identifying this as a key area of support. When we had this manipulation, price came and displaced through that weekly order block. That's why we also have now confirmed this as our market structure shift. We've displaced through this weekly order block. We're not coming to sweep areas of sell stops, but we're displacing through it, showing a change of character in the market. This indicates now that we're reversing. So what happened was price retested, just like support and resistance, came back to retest that weekly order block as resistance. And then we saw it continue to displace out of that area. So if I go back to the daily here, there's the initial low that's been taken, where we have your pretty strong displacement candle right here to that area of liquidity. Okay, so first thing is, we've been trading this internal liquidity. We've identified the model. We had this would be the internal grab. This buy side of the curve would be price running to this internal liquidity, resting buy stops. And if we're expecting the external to be bearish because we've identified the market structure shift, this is a change of character. We've now want to be trading this move to the downside. So what did we wait for? We wait for price to show this displacement candles of run to stops. This is a run to these buy stops that create this insufficiency. So when price broke through this insufficiency, we're bearish to this initial low. Looking at the daily here, there it is. It respected, but then we ran. But we had this daily move. This was a daily candle all the way to this area. So now that I'm looking at it today, this morning, I still took a sell this morning on the US dollar CAD because I'm looking now at the 4 hour and I'm saying the external continues to show me we're moving bearish. We've now taken this initial low. We can rebalance after this. We didn't really displace through this, expanding through this area. We're now looking to rebalance. And why would we be looking to rebalance? Because that's one of the things the market likes to do. We like to rebalance insufficiency and also rebalance equilibrium. So price went ahead. Here is our order block. This is a key area where I would be expecting buy stops to be resting at. Price will come back into this order block and respect it, but sweeping areas of buy stops. So here is our run to stops. This is a move to run to stops. If this insufficiency holds, it's going to continue to give us bearish sentiment that we're going to continue to run to that resting liquidity down below, like I showed you earlier. So that's why we took a sell here. We're now in this sell side insufficiency. We're expecting this to hold as we're sweeping by areas of buy stops. And I'm looking at this buy side imbalance that was created of this run, right? I'm looking at key areas of insufficiency. The key area is where we running to in this move. This move was a run of buy stops that creates insufficiency. When price runs through that insufficiency after respecting the sell side imbalance, and we're continuing to move bearish because our external is bearish, this now gives me confluence once we run through this that we're running to this low and possibly the lows of that resting liquidity I showed you before. So we're very bearish here on the US dollar CAD. And what I do now is I go to the Euro US dollar and we trade both of these pairs as a correlation. Okay. Both these pairs I use as a correlation. If I see the US dollar CAD is bearish, I would like to see a bullish setup here on the Euro US dollar. So going to the daily, let's go to the weekly, and let's take a look at the external. First thing on the external is we've taken out all these initial lows here. Okay, we've had this price leg come back down here, sweeping all sell side, and now we've had this kind of this expansion move to the upside here on the weekly. But what's been going on is we've been now accumulating this range. Okay, range bound of support and resistance, just sweeping these initial highs and lows. So if anything, I would say, okay, with all this generated buy side here, maybe price will continue to work its way there. Now, this is looking at the weekly model. That doesn't mean that in the next few days we're going to see this expansion move to this resting buy side, right? That doesn't mean that. That just means that price could work its way to these areas, meaning that there still could be manipulation. We could see price do this, come back down, sweeping all this, do this, sweeping out this low, and then continue to rally all the way to these resting buy side. That's just to get the bias of the external. So if I go the daily here, I'm going to say, okay, let's look for the more internal models. This was the internal model that we trade right here on the daily. I'm going to zoom into the 4-hour. So we just closed out some buys here. Now we're kind of just accumulating a little bit. So the euro-US dollar is not setting up perfectly right now as we just finished some buys here. And the reason here, I'm going to show you how you find these internal setups. Once I've got the external that we're bullish, we had this run again. Where was price running to? To this initial either insufficiency or this order block. It's resting sell stops. We had this expansion move. Eventually, we need to rebalance. Price needs to go ahead and hunt areas of liquidity to push price either up or down. So price ran to areas of sell stops. This order block plays as support here. So when I went to the 4-hour, now that we've ran lower to this higher time frame order block, that's gonna play as support. If we now swept those areas, let's see what happened. Price displaced out of this area, this order block. So here was my internal model that we've been taking buys, hunting this initial buy side right here. You have many entries to enter. Once we've displaced out of a key area of a higher time frame PD array, which is that order block that I showed you, this now indicates or identifies as a market structure shift. We're shifting. It's a change of character to what? Buy side. So you can go ahead and target this buy side. You can target this buy side. And then where would your entry be? That insufficiency of that displacement, that buy side imbalance. Price comes back, taps into that buy side imbalance, and we expand. Now, what we do is we expand. We don't expand to this buy side, but we expand to this buy side, sweeping that buy side. And then what happens? Another run stop. There's another sudden move in the market to the downside. If we're on the buy side of the curve, this would indicate me to run stops. Where's that initial internal liquidity? The internal liquidity would be this order block right here. Resting sell stops. Price runs the stops to push price to this external. What happens? We run again. So here's another trade is when you see price running through that initial run stop insufficiency. Price runs through that. Then right here, you're pretty bullish. You expect price to run to this area. So what we get again, another run stop to the downside here. Okay, where price run to? Again, back to this inversion. So another run stop back to this inversion. So we just identified the US dollar CAD is bearish. We're looking at the euro US dollar, looking for a bullish setup. And what are we getting right now? We're getting price running to this initial sell side insufficiency that caused this run stop. Price displaced above it. We did sweep this internal high, but we have an external high. The external high is here. So do we have reason for price to move here? Yeah, we do. We do have reason for price to move there. But let's see, have we rebalanced? So we've now swept this initial high, and we're running stops. So once we have identified a run of stops, the next move after the internal liquidity is grabbed is the expansion of liquidity. That's the reason we get this in the market. These runs of stops is to grab liquidity so price can push to the external. The market has to be balanced. Okay? It works with liquidity. It's a liquidity pool that pulls and grabs money to push price up and down. That's all it is. So once we understand that and we identify these areas of price action, we can identify where price is moving to. So what I'm looking for now is if this inversion doesn't hold, because now we've rebalanced to this insufficiency, we could possibly be looking to hunt sell side initial lows. And by the looks of it, looking at this 4-hour, because we're now rebalanced into the sell side, and we're starting to kind of displace out of this. If we displace more out of these areas, coming into tomorrow, I'll be looking for these initial lows to be the draw of liquidity. We could either be coming back to this insufficiency. I most likely would like to see this hold, this inversion hold, because I want to see it run with the external draw. This would be a manipulation. We do not want to be trading the manipulation, but sometimes I will, but not in the case that I like to do is not trade for this manipulation. I'm not trading for run stops. I'm trading for price to expand to generate liquidity. So I'll show you another example here on the New Zealand CAD and the Aussie CAD. Same thing. Same thing what we've been doing. Took some buys here on the New Zealand CAD and Aussie CAD this morning in my VIP session. For those that don't know me, I run VIP session class, part of Traders Network Club, and we go through every daily morning sessions, and every morning we go and we analyze this and we place trades live. And I took a buy here on the New Zealand CAD. Let's go to the daily here. Actually, sorry, I want to show you the external. Looks like my drawings disappeared. Might pop up any second. Or maybe not. Okay. Either way, that's fine. We'll go ahead and recreate new ones. So what do we see here? Going to the weekly. Right? Let's go. We're looking at the weekly model here. And what we see? Okay, first identify we have this expansion move. This expansion move would, to me, now identify as a market structure shift. Okay? Reason is we've expanded. We displaced through these bearish PD arrays. Okay? And we just swept that low up there. Okay? So looking at this weekly, I want to see now when price came back to rebalance this, because I also want to look for this to be rebalanced. This is a big expansion move. I want price to at least rebalance 50% of this price leg. That's called rebalance to equilibrium. Price came to an area that I would call a breaker block. Looking at this, is this a weekly breaker block? So there is a bullish P array that's been respected. Okay. A breaker block is an order block that failed. Right? Here we have this order block. Price displaced above it. This becomes now as a breaker looking for it to hold as support. Someone said pound US dollar, please. Yes, I will jump to the pound US dollar right after these. What's up, Trader DK? So here is the breaker playing as support. What do we see going on in this breaker right now? Okay. First thing we have to understand, another thing the market does, it generates liquidity. Look at this low resistance liquidity run. This is all generated buy side. Price will generate liquidity for price to then come back and sweep in liquidity ranges. So what we see in this breaker, first thing we see is a nice expansion move. We see displacement out of this breaker. Okay, what happened when we displaced out of this area? We create insufficiency right here. There's that insufficiency, buy side insufficiency here, or buy side imbalance. Okay. And then what happened? We had this displacement, insufficiency created, price came back, retested it, and what did we do again? We displaced again, indicating we're bullish. These generate buy side, to me, would become the draw. I would look for price to continue to work its way up, sweeping all this generated buy side here. So we had this expansion move, price came back up, tapped into it again, and we now seen a little bit, not too much displacement here, but we've seen price obviously rally up, and now we swept this initial high, this internal high. So now that we swept this internal high on the weekly here, we could see a rebalance before price wants to move up higher. So what I did here, let's go to the daily now. Now that we got the weekly, we're pretty bullish on the weekly. Let's go ahead and line this up here. This initial high was taken. And what do we see here? Look at that. Another sudden move to the downside here. Why? Because we are now taking out buy side liquidity here. Let me go ahead and mark this. Buy side has been taken. We run to internal. That would be the next move. We run to internal. Where's the internal? The last order block here would be a key area that I would look for because that is an area of resting sell stops. This order block right here. That's an area of resting sell stops. So we have to identify those things. So now I go to the 4 hour. There's our run. Price create insufficiency of this run to stops. And we've displaced through that insufficiency. So here is my internal model that I'm trading for the morning. Is our sell side of the curve. Let me do this. This is sell side of the curve here. And here is my buy side of the curve. And I'm going to take advantage of the buy side of the curve. We ran through this insufficiency with displacement. I'm looking for this to play now as an inversion. I'd like to see price come back to retest this and then run back to this initial buy side, which also is equal highs. Equal highs is a magnet to the market. So there is a buy setup here. Looking at the 4 hour, this is a market maker model, buy side of the curve, looking for buy opportunities to this and these equal highs. Fozzy, it's just Thanksgiving. I'm going to rewatch part of the live stream later on the channel. Yeah, of course, man. So before I go to the pound US dollar, just to show you Aussie CAD, same thing, guys, because this is another two pairs that I use as a correlation when I trade Forex. Same thing, okay? We had the weekly external buy side. We're bullish here on the external, right? Why? Because we've taken sell side, we displace insufficiency of that displacement, respected as support. Once again, displaced again, insufficiency, acting as support. We're on the buy side of the curve of this external. This is my draw of liquidity here, buy side, external range. So I zoom in, I look for the internal models. Here was one of the internal models we traded to this buy side, right? We trade to this buy side. That has been taken. And there's more. Everything's fractal. ICT is very fractal, guys. The market's fractal. You have to understand these things. So what happens if I look here? First thing started, let me go to the daily here. Here we had this run, okay? Another run. Where was price running to? Well, here's the daily order block here. We do have this weekly order block right here, okay? That plays as support as well. Price ran to that area. I'd like to see the Aussie CAD run further. The New Zealand CAD was a lot more bullish here. So when I go to the Aussie CAD, first thing is we had that run through this insufficiency here, but I wanted to see it run lower because obviously there's a lot of accumulation here. Just because we ran through this insufficiency doesn't mean that we're going to run. This is just a run stop, another run stop of buy stops. Oh, sorry, sell stops. And then what happened? Price ran back through this insufficiency, the initial insufficiency of that run. So this to me is already high. Now I'll be looking for this internal model, which I would be trading this initial high here. That buy side right there. I'm looking for price to come back and sweep the internal. And possibly maybe we get some sort of manipulation after sweeping this internal. But that's where I'm expecting the draw to be, would be this internal high right here. Because now we do have this inversion right here. Price could come back into this inversion. This would be a turtle soup setup. This would be price runs to the internal and then pushes the external. That would be a turtle soup setup. Looking at this model. So there it is. Low resistance liquidity run. Price swept already some of this resting liquidity. It's going to move to this external. We might just get some sort of turtle soup. It just movement to internal and then to the external. It's a turtle soup setup. For those that don't watch Inner Circle Trading. So I'm going to go ahead and take a look at the pound US dollar. I don't know what time I have till, so let's quickly just jump to it before we do run out of time here. Pound US dollar. Pound US dollar, we trade as well. In one of my VIP sessions, we have different levels. In level 2, we trade the pound US dollar. And very bullish right now on the pound US dollar. Very bullish. Let's take a look why. If I look at the weekly, we can see first, then let me zoom out here. You can see this more. Huge movement to the downside. This move right here. This move right here was obviously taken out sell side. Sell side has been taken. Then we were looking for a rebalance to equilibrium. We've had more than that. So let's see what happens if we zoom in here. Again, if we zoom in here, price runs through this order block right here. This order block then becomes that breaker that plays as support. Okay. Then if we zoom in a little bit more, price then kind of displaces out of this breaker, or at least you can see it right here. Price displaces out of this breaker. Price comes back to retest it. Okay. Now you can look for the internal model. Now that you've had this displacement out of this breaker that gives you that bullish sentiment, this is how you trade these models. Once you've confirmed that we've displaced out of this breaker, this is holding in support, then wait for the run stop. And then there's your internal model. Just like that. Very easy. Wait for the run stop. There's your internal model. Now you can look for when price comes back to retest this. Now you wait for, using these concepts, wait for a change of character, wait for market structure shift. And if I go to the 4-hour or the daily, you'll see the setups are here. There's your move. There's your displacement. What did price do when we displace? We create this insufficiency. How we know this is displacement through? Look at these initial highs in these order blocks. Your price displaces through these initial highs and order blocks. Now, I would like to look at this order block because I'm looking at these bearish P-rays. I like to see that. Then that's when price displaced here. That to me gave me a lot more confluence. Now we're changing character. Now we're seeing a more of a market structure shift than this insufficiency right here. Price came back, institutional order flow drill, and we ran up higher. Then we had another run stop. That's why we trade internals, right? I don't like to set up here, take a trade, and target this whole swing to the external. Because price will manipulate. We'll get an expansion, and we can get this. And then this. And then price runs there. You don't know how the market's going to react, so we take the initial highs, we take the internal liquidity grabs, we take out partials, okay? Anyways, there was our insufficiency. Price continued, but look what happened. Price ran back to that insufficiency. So if you entered here and you wanted to trade to this external, you would have had to be a little more patient because price came back to your break even, and then we ran to that initial high. But I'm an internal guy. I trade every internal market. Like I would be looking for, once again, once we had this expansion move, I'll be looking to see this expansion move right here. I would be looking just for this initial high. And then wait for another run stop. There's your another run stop. Then you wait for another setup to this high. Where's the setup in this initial high? It's all fractal. I'm just trying to give you guys the idea of how fractal this is. Everything's fractal. That's why I trade internal models inside a model, because I like to trade those internal models and make my money while I'm not getting run stopped all the time. There's another internal model. Price comes back to that area. Let's wait. Do we get displacement out of the key area? Okay. Here's the run stop. Where price create insufficiency. This would be the insufficiency I'd like to see price run through. There's that run. Okay. Price then runs with this displacement, runs through this insufficiency. See how this was respected? So I would wait for more confluence. Some people might see this and say, oh, this is a market structure shift. I'll be looking more of this as an internal. I'll be looking for that high than if I was trading this. That's another internal model. But if I'm looking for this external, I want to look at this insufficiency get run. Price runs through this insufficiency. Then I look for this insufficiency to be my support now. And then I buy here, targeting that internal model.
Hey, Cameron.
Hey, how you doing, Chandler?
I'm doing good. I'm doing good. Thanks for coming back on the show today.
Oh, no, of course, man. Anytime. I appreciate you having me, man.
Yeah, we love having you. Yeah, we hope to see you back on again. I'll definitely be reaching out. And guys, I've been putting Traders Network Club in the chat. Here it is right here. So go sub to Traders Network Club. You'll see a lot more Cameron over there. And it's been nice having him on. This is his second time on the show. So yeah, it's been great. So Cameron, thanks for joining us.
Yeah, no, anytime, man. Appreciate it. Again, appreciate it, man.
All right. Well, we'll see you next time. And guys, we're moving along to our final segment of the show at the one and only Chris Pulver. So stick around. I'll be playing a little clip about the Pulver alerts. Chris Pulver shares his trades in our group. So you can buy a little extension to get access to those. And this is some information about that.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's up, everybody? Happy Thursday. Welcome back to the session. Had a busy morning, and let's talk about it. So I just updated in the Discord channel my trade on the SPY. I just closed out for profit. So we had the trade. Let me go into the alerts here. I just updated it in the Discord. So if you're following my alerts in my stock and options, I just posted this for everybody. This trade is right here. The 927.574 long call, I got filled for $1.11, $1.09, $1.15, depends. I mean, I took this on like 8 accounts. And so $1.09 was my best trade, $1.15 was my highest trade. I closed out today from anywhere between $1.75 and $1.98 credit. Taking the profit on that one. And then I also flipped around another trade. I did a 9:30 expiration this morning, 9:30 expiration on the SPY, a 570 long put. I paid $1 for it. I actually paid a little bit less than that. It was like 94 cents. But it's roughly $1. Let me see what it's trading for right now. And where are we at? So right now, this trade on the SPY for the 9:30 expiration, it's trading for $1.30. So if you didn't get in when I posted the alert this morning, I took the trade. You can, if you look at the alert, it was posted just a few minutes ago. It was, I mean, it's already up. So I'm not saying it's a bad trade. I just wouldn't chase it for the extra 25 to 30 cents because directionally, if this is what price ends up doing, why did I take the trade? Because I'm looking at this very noticeable gamma level here at 570. I'm looking to see if price will make its way down to it. And if so, that we can turn about $1 debit into about $1.80 credit, hopefully more. And I'm good with that. So if it happens today, if price actually falls today down to this level, then we should maybe see over $2 credit on the trade. So if you didn't take the trade with me this morning, don't chase it. These are 0 DTEs or kind of that short-term stuff where it's like 1 to 2 days expiration. The option prices are very sensitive. So if you're not getting filled within about 15 cents or 20 cents of my order, I wouldn't take the trade. But I think it's valid. If we have a pullback right here, if price pulls back and it's still trading the same trade, look, the same trade, if it's trading for, let's say 90 cents, I still like the trade going after this gamma squeeze and the strike at 570 by the end of the month. Now, the key takeaway here is I think this level gets hit like today or tomorrow, but I went out to 9:30 expiration just to be safe, which is not tomorrow, but it's Monday. So I went and I bought a little bit more time, which is why this trade is a bit more expensive. But similar to the trade that I just took profit on, had I done a 0 DTE, it would have been worthless. Okay, so the fact that we gapped higher today to the gamma level that I was looking at, we got profit on it. So we turned, $1.10 into $2 credit because we were willing to buy a little bit of time, and time worked in our favor for a day or two, right? So the same thing is true here. I want price to go immediately to my profit target. But in case it doesn't today, a 0 DTE could be worthless if price doesn't cooperate directionally right away. And so I tend to go out to like a 1 or a 2 or even a 4 DTE if I really have a lot of conviction on these strike prices. I'm willing to go out and kind of take it within the week. So I'm going out to Monday, which is the end of the month and end of the quarter. And if price ends up finding this strike, I have a chart alarm set on the SPY at 570, and that will be a nice little win. So hopefully it hits 570. I've got a chart alarm set on my alerts right here. I want to talk about Micron in a second. So SPY, let me zoom in on the 1 hour chart. So we did break all-time highs again. We breached that Thursday high from last week after the FOMC push. And if we come down and fill this gap that's right around 570, I'll look to take that short-term profit. All right. So hopefully that plays out. Micron, I want to take a look at that one. Micron just had a gangbuster report. Let's see what that looked like. So they beat revenue by 1.35%. They beat earnings by 6%. We had a massive move. I mean, I priced this one out with Frank yesterday. The market was only looking for about an $8 to $9 move, and it moved. From the open today, we opened at 113. I had a long at 96, or I'm sorry, short at 96. So we went up 96 to 113 is what, $17, and it was supposed to be an $8 move. So we went over a 2 standard deviation move in Micron, and that was my concern, is it was going to be a mover. And so had I taken the other trade where I bought the 650 debit, it'd be trading for probably $3 to $3 and change right now for credit. I could get out of the trade and be done with it. So a 650 debit turns into like a $9.50, $10 credit, give or take. I did the opposite. I was trying to keep it contained, and it blew through that level. Doesn't mean anything. Actually, if the trade is going to come back and fill, if there's any chance that we gap today and we start to fade lower, as long as my price gets back below 106, if it gets back below 106, there's still a chance I can make some profit on the trade. So right now it's essentially a full loss, and that loss is going to be $350 a contract. If it comes back down below 106, there's a chance I can actually keep the 650 credit that I took yesterday. So I will continue to monitor Micron for the remainder of the week. So today and tomorrow, because that's what the expiration is tomorrow after market. So if we get lucky where this fades lower, that actually could give us a full profit. Realistically, if we get back down towards 106, I'm just going to set hopefully I have a chart alarm left because I used up 400 of them already. So let me see if we get back to 106. Yeah, all right, I got a chart alarm. So if we get back down to 106, that's good. And I want to see what my credit is trading for. Because if it's trading for, let's say $5.50, $5, $4.50, rather than trying to wait all the way to expiration tomorrow, I'll just take a partial profit, move on. I did have a trade close out this morning as well. I need to update this one in the Discord channel. The QQQ is fading hard. I got out of the trade. How many of you took this trade with me? I am curious. I'll find it in here. I know it was in the stocks and options area. So this is my section here, stocks and options. It is SPY, that one's done. Microsoft, that's pending. FXI, that's new. JD, that's new. Meta, Netflix, these are all trades from this week. CMG, Costco, SPY. Where's it at? Come on now. NVIDIA. Oh, yeah, here it is. So NVIDIA, I'm still waiting. Palantir, Win, LVS, what is that one? AMSC, NDX. Did I do index trades? Maybe it's an index trade. There it is. There it is. Okay, this is the trade. I finally found it. Index trade. I bought the 474 call, and right now we gapped open this morning. Look at the gap up. We gapped up towards 494. Okay, so if I have a 490 sell call and price is above that, that essentially means I'm trying to max out my profit. Now, the max profit would be $17. Okay. So because I buy the 473 and I sell the 490, that's a $17 max profit on the call side. Right now, the put side can be completely worthless. But if my net position, if I paid $11.50 for it and I can max out at 17 on one side of the trade, guess what? That means I can make $5.50 max profit, right? So I can lose everything on the put side, make money on the call side, and close out for profit. So today I close out the trade for $14 credit. So this trade is done. So I took an $11.50 debit, closed out for 14 credit today. And the reason I closed it out is because number one, I'm hitting my profit window and I'm hitting it earlier than expiration. So when it's earlier than expiration, I don't get the full value out of my $17 max profit until expiration. And what that would require is price would have to be above 490 by October 4th. And the fact that we're up to 494 today, I'm just saying it's good enough. I'm going to take the profit and move on. So this trade is done. I'm going to do an update to this one. So let me reply to this message here. And this will be QQQ 10-4 expiration. Let's see, 473 by 490 bull call spread. And the 471 by 450 bear put spread. The QQQ gapped up to 494, which is better than the 490 sell call. Closing for profit today at $14 credit. So I was looking at that one early this morning. I saw the gap up on the SPY. I saw the gap up on the Qs. The gap up was like $9 today on the Qs, and I'm just taking the credit. So this trade is done. So I'll back say because I don't want to wait until 10-4 expiration for full profit. So I'm taking it now. Okay, so there is message for everybody, and grab a few bucks here on the Qs. So that trade is updated. Okay, move this back over here. I'm still looking at some type of price action on the SPY as well as the NVIDIA trade. So SPY is a similar setup. So we did have my center price is around 562. We pushed up today to around 574. I'm just going to let volatility do its thing. If we somehow continue to melt up higher, then my SPY trade should be closing out for some profit. Let me check and see where it's at right now. It's probably break even or better. Let me check here. I might take a break even if I can, just to not worry about it. But let me check here. Let's go SPY. And 1, 2, 3, 4. So I got in for a 960 debit. Is trading for 932. Let's see here. 577 was my sell call. We got up to a high today around 574.70. So the one thing I do have is I still have a little bit more time. I think what I'm going to I'll go ahead and do this. I'm going to look to see if I can close this trade out for break even, because I'll take the profit on the Qs. I'll give NVIDIA some more time, and I will look and see if the SPY wants to do the same thing. So I have this one pending at $11. I'm just going to go ahead and replace this. I'll take a break even at 960. And that way I'll sacrifice a break even on the SPY. I'll take the profit on the Qs. So I'm going 960 break even on that trade for the SPY. So same thing here. I've already got these pending orders, so I'm just going to go 960 and just try to get out for break even or better. Okay. Same thing here. I'm only 30 cents away, so if price pushes up and tries to retest today's high, that should be enough to fill me at break even. That way it's no issue. And I'll monitor it. I mean, if it goes lower, it goes lower, but there's still time left in the trade. I'm just trying to get it managed so I can take the net profit on kind of the kind of triple position that I took between the SPY, the Qs, and NVIDIA. This one here for 960. This is a break even at 962, so I'll go 965. 965. This one 962, so we'll go 965. Okay. 962, 965. All right, so I'm going for break even. Slightly better than break even there. All right, so that's updated on the SPY. NVIDIA, I'll still wait on. Micron, let's take a look at this one. I took the trade yesterday. Prices went out with Frank. So 1, 2, 3, 4. And right now it's probably showing a loss of like $10. Yep, so it's 968 right now. And Micron is trading around 110, 111. I need to see price. You can see my legs here on my options chain. We're trading around 110.60, 110.50. What I'd like to see Micron do is try to come back in to fill. I mean, it's not necessarily come all the way back to where you started, but just try to make an attempt to get a gap fill going by tomorrow. If we get a gap fill going by tomorrow, we get back below 106, then I can see this 975 right now trading down to, let's say, $6, maybe $5, and I can actually turn that into profit. So the reason I took the trade is I'm collecting 650 on the trade up front, 651, which means I'm risking 350. So the most I can lose on the trade is 350. If price cooperates and comes back in to fill a gap, I can turn that into profit. And if it's below 106, I could actually, if I want to be gutsy here, I could turn this into a full profit trade as long as we stay below 106 by Friday's close. So we'll see what price does. Okay, Costco trade. Yep, let's take a look at Costco. Costco didn't fill. Costco, so we have earnings. Yeah, the trade hasn't filled yet. So I've got a 965 by 970 bear call spread. It's a 250 pending order. And let me check the expiration. I did a 10-4. No, is that right? No, that was what Frank talked about, was $1,000 long on earnings today. So earnings is today after market on Costco. So the trade that I'm looking to take is I went out to the expected move, and I'm looking to do a bear call spread on Costco to sell it. So this is pending to get filled. It hasn't been filled yet. And earnings hasn't hit yet either. So we'll see what earnings gives us. I would imagine earnings are going to be relatively positive, but let me see on the expected move, like whereabouts. Let's go to this Friday's expiration. This is looking for a 935 expected move based on a $35 market maker move. So highs on Costco based on market maker implied volatility is around $935 to $940. My order is a pending 965 by 970. More than likely, this trade is not going to get filled. More than likely. And that's okay. The trade that I also took in Costco, if you're interested in this one, I believe I posted this trade as well. Let me see if I can search for stocks and options. This should be under Costco, BTI, IBIT, NVIDIA, Palantir, Wind, LVS, AMSC, NDX. Let me go down here. Costco. So there's the 965 by 970. And then this is the other trade that I posted in Costco. This trade is doing just fine. This is a 1-1-1 strategy. What that means is I have, let me just grab the screenshot here. So I want to own, I'm willing to own shares of Costco. And so my bear call spread is way up here to try to see if price wants to gap up and then fade and I can get that bear call spread filled. But that's pending. And like I said, if it doesn't go high enough, it won't fill me. So that's no big deal. But the trade that is in is a nice little income play where I'm looking to see, if Costco is going to drop a ton, I could own this way, way, way cheaper, right? I would get, ownership would be, let me read the numbers again. So I'm selling a $600 put. And if I'm selling that put from current price, Costco would have to drop about 33.5% for me to get assigned, which is unlikely. Okay. So I like that trade. That was it's a bit of a longer term trade. It's out to January of next year. I would imagine that if we have a decent run in the markets for the end of the year, Costco is going to go this way, and that trade that I'm taking that's down here for that 1-1-1 is going to be a $550 credit per contract, and that's a pretty easy trade. Now I'm willing to own the shares. I have the buy power to own the shares. I don't expect to own the shares, but whatever happens, like I think this trade is going to be a nice income trade. So I think that one's looking good and that one's filled. This one is pending. Does that make sense? So based on earnings tonight after market, we'll see where price comes tomorrow. And that trade either, if Costco blows through the upside and we get filled, I still like that trade. And this trade, if Costco goes up, this trade looks even better for profit. And I can maybe take, half the profit early, but I'm pretty comfortable with just keeping the trade as is and just going after the full profit by expiration. Okay. All right. Good stuff. All right. So let's talk top down here. SPY, we did gap higher today. We're at new all-time highs once again. I had a little flashback from who remembers just after the 4th of July when the SPY made 6 all-time highs in 6 days. Show of hands, anybody remember that? Because what have we been doing here? All-time high, inching higher, inching higher, inching higher, inching higher. So we have another all-time high right here. Is it just me, or does this look a little stretched? Like the market clearly is just like trying to melt up higher, but there's no real force behind this move, right? The force was during FOMC, we had the price get faded back down, and then all the aftermarket activity took it up here, got faded, tried to find its way back, fought its way back, fought its way back. We're here at the all-time highs. If this move fades back down, support-wise, I'm just watching this. I'm not saying this is turning bearish all of a sudden, but I'm saying that we are probably going to be doing something to have a bit of a pullback or correction prior to the election. I know earnings season's kicking off here in a couple weeks. Like October 7th will be the official kickoff. We'll have financials, and then we get into the Mag 7 and all the big stocks that are going to be reporting. I'm sure chips and semiconductors will be super important as well. But if I look at this recent price action, if this FOMC low right there, if price ends up breaking below, and the SPY is pretty simple. If we break below like 570 or 569, I would say that we are likely heading a little bit lower for a correction. Doesn't have to be big, but from all-time highs, do we correct back down into, post Labor Day levels or Labor Day levels before we sold off? Maybe, and I'm just curious. So I'm just trying to pick my battles. I think today be a good day. Like Frank likes to sell those bear call spreads. I think today is a good day to sell bear call spreads. Getting a bear call spread on the SPX or the NDX probably looks pretty good today. I think, at least in my opinion, short term wise. In fact, I want to look at that. Let me go NDX. NDX today. Let's see. How high up can I go? So NDX up here. So we filled this gap. We're fading that gap. 2280. Let me see what that looks like. 2280. I mean, there's a pretty high probability bear call spread. 2280 is the high from the gap. If we don't come back up and test that today, that's a 75-cent credit, which, I don't love risking $900 to make 75 cents. I don't love that at all. But I could look at something that in a zero DTE, if this can offer me maybe $3, I'm going to go ahead and put this trade on. So let me check something really quickly here. SPY, let's go NDX. So NDX on the day. And also I want to check my gamma levels to see if the Qs have something to the downside. So right now the Qs, they opened up. They filled the gamma level here around 490. That trade's already kind of accomplished. I don't see much of anything left in the market today. So seeing this on the Qs, I think I might stay out of it, because if this was starting to fill up to the downside, then I'd be more inclined to take that bear call spread and say there's no way it's going to come up and find the high today. But because we have open, we found the gamma level, we're still above the gap. If price does this today, if price does that today, I don't want to have my bear call spread sitting right there to get poked, right? If I trade an NDX, I mean, getting $3 credit is decent, but I'm still risking $7 on the trade. And if I'm wrong, if price just comes up and pokes that high, I don't run a risk $7. So I'll sit on the sidelines for right now. Okay. Have you been surprised at the performance of stocks this month, bearing in mind September phenomenon? Good question, Lee. And I mean, Yes, because historically, when we start out with a rough September, it usually doesn't bounce back and show this type of resiliency. I do think the Fed kind of swept in at the right time with the Fed cut in the 18th, and it was a more aggressive cut, right? 50 basis points. The market's still anticipating more. One thing I saw yesterday, though, take a look at this, okay? Right here, this is the VIX term structure. So I don't want to get super fancy on you, but basically when this is sloping down, that is called backwardation, which means that short-term volatility is way more expensive than long-term volatility. And it should be the opposite. Usually this instrument, it looks like this. Usually the instrument is always sloping upwards, and that's what's called contango. So the fact that it's sloping down for the next couple of months, this is October, November, what this is showing is that, hey, what's up? Cosabella, get out of here. What this is showing is for the next 30 to 60 days, this market is anticipating way higher volatility in the near term than long term. So the market is more uncertain now than it is in the future. And that's another reason that I would consider we're going to see some volatility ahead of the election. So here's what we have, right? We know that the election is November 5th. We know that the Fed has another rate decision November 7th. Until then, we're going to get through another round of employment data. And that employment data would include non-farm payroll, which is going to be next Friday. Let's go to the calendar here. So let's go this week. Today, by the way, we have a bunch of Fed speakers, so I'm curious if they say anything, meaningful. Today's GDP numbers came out at expectations. 3% came out 3%. Unemployment claims 224 came in 218. I mean, the futures market overnight was up the whole time. Like this is, let me go to like 4 p.m. This is what's crazy. This aftermarket stuff, it sometimes drives me crazy. Look at how much from 4 p.m. yesterday at the close, 4 p.m. to when we started trading this morning. Look at this market. Just rips all freaking afternoon after the market closes. It's insane. Sometimes it's like, why do I even trade opening bell to closing bell? It's like the good stuff sometimes is after market hours. I mean, all the direction typically is after market hours, which is why I trade a lot of strategies that don't require the price to move a lot during opening and closing bell, because directionally the market doesn't give us a lot. And if it does, great. But usually I'm a option seller and just trying to grab a bunch of premium. So anyway, big move up to the upside, fading down. What up, Frank? We got to stay focused, brothers. Yeah, I can hear you, dude. What's up, man? How are you? Good. How are you, sir?
Pretty good.
Good.
I sold the volatility this morning to the upside, kind of. Took a bear call spread. That's all I made today, though.
Okay. What type of timeline on that?
0 DT.
So just for today. Got it.
Yep.
All right. So right now, let's see, closing out for $150. I've got about $40 of profit on that 570. Okay, so I'm up about $40 on that 570. Good. All right. Cool. So I don't know if you were listening to this segment earlier. I do have a 570 long put out to Monday. My chart alarm set at 570. That's what I'm going after. So if the SPY hits 570, I'm looking to close out a long put there. Micron had a 2+ standard deviation move, Frank, but it hopefully will come back and fade and fill this gap a little bit. If it does, this should still look pretty good for maybe a profit play tomorrow. Realistically, if I get this to trade to like $6 or $5.50, I'm probably just going to take the profit. So I'll keep an eye on Micron.
Okay.
So
what is it at now?
Well, so my trade itself or Micron. My trade is it's trading for like 9 and change. Here, I'll show you.
Did you get it at 6 or something? Was that
I got it at 651. Yep, 651. So I'm in the trade for a 350 max risk. So it's not a big risk. It's trading for 950 right now. So if I want to say it's over and done with, I can close it. But I'm gonna keep the trade open.
Yeah, I think if you wait, could have got overextended, could fade down by tomorrow.
We'll see.
What are the levels though for price?
So I bought the, or I'm sorry, I sold the 96 call and I bought the 106. So to flip that and close it, I need price to get back below 106 in order for my profit to be reached on the call side. Right? Like, so if you
Gotcha.
look at my, let me, I can't make this any smaller, but basically, if you look at my chart, I need price to get back in this yellow box. So if price comes back into this yellow box, then my 651 credit has a chance to stay full credit, by the way, because it is a line in the sand. If I have the sell 96 and the buy 106, as long as price is below 106, I can achieve that full profit because I've essentially contained the move. So, but again, realistically, I
Yeah.
need price to drop another, $4. Hopefully it does, because that was a big ridiculous move. We expected about $8 and it came out swinging with like $17. So that was a big move, man. All right, Qs are falling.
Yeah. I wanted to talk to you about oil.
Let's talk oil.
So Saudi Arabia, they have, like, they said their intentions were to increase production later this year, and I think Libya
Okay.
said the same thing. So I guess the issue was fears of oversupply if demand is low. But I thought because of China's stimulus this week, it was going to be more, I don't know, maybe that would prompt demand, but I'm not entirely sure because I own Oxy, and I
Yep.
was looking at it this morning how it is basically testing that low at like $50.
Yep.
If it closes below that, I'm probably just gonna either get out or trim my position. But I didn't necessarily think that an increase in production would be bad as long as demand was there. But if demand isn't there, then I don't really want to be in oil. So I wanted to know what you thought about oil demand for the rest of this year.
I think, I mean, let's look at U.S. oil. Clearly there's some sensitive reaction around increasing production if they're gonna oversupply. So this is interesting. I wonder if they're talking oversupply or talking increase in supply in order to meet global demand, or if this is just trying to drive prices lower. I mean, OPEC does not want to drive oil prices lower. I feel like they'd be increasing production because global demand is growing. So, look, I think until, and it's not just Oxy, but I think if U.S. oil can stay above 65.50, if it stays above 65.50, I'm still relatively bullish on like oil being stable right there. If it breaks below this, then if we look left, there's really not a ton of support outside of what we just had from March of 2023. This goes back to July and December of 2021. But if we break through this floor meaningfully, then we could be talking oil prices back into like the mid 50s. So
Yeah.
yeah, man, this is an interesting spot. So I like oil with a potential like bull put spread, but not necessarily being like crazy directional. I'd say an options trade where it's defined risk. But I think I'm going to wait. I mean, I have exposure on oil with OXY. I have CL with a 65. It's a 65. What is it? 65 put with a 55 long put as a hedge, and I'll keep an eye on that one. But I'm definitely watching oil closely. So CL is trading at 67, and the same thing. I mean, I want to see that we stay above this like 66 handle and find all the support to bounce. So
Okay.
I like there still being a bit of a floor to see if global demand will actually stabilize, because the reason we sold off 20% was global demand is slowing. Global demand is slowing. All this from starting here, all this was the same echo of global demand is slowing. So I'm not really sure what the commitment to unwinding crude oil cuts. Interesting. Yeah, man. I mean, if they want to oversupply it, that's a gutsy play. I mean, I guess that would help inflation. That would help inflation. The issue being, though, we help inflation, but we also see oil prices and energy prices look way rougher. Yeah, I don't know, man. Energy is slippery because everyone right now that's talking about this final rotation and this last bit of expansion and whatever market cycle we're in, everyone wants to load into value. Everyone wants to load into to energy as a differentiator. Well, that was it quick. I just got filled for $1.80 on my my SPY. Well, that was easy.
On
All
your
right.
put?
Yeah, I did a long put at 570. It's not even at my strike price, and it doubled. It's 100% gain. So that was
Yeah,
easy.
it fell pretty hard in this
Yep,
1 minute.
That's the gamma squeeze working for you. So that one got filled at $1.80. Make sure this one got filled as well. So I'm just double checking things here. So SPY.
We closed the gap. That was yesterday's high.
All right, so daily profit play, bonus play, update, 570, 930 expiration, 570 long put. It was a 90, what did I get filled at? 91 cent debit, $1.80 credit, closed for profit. And there's, honestly, this might be one of those days where it'd be best just to move a stop loss. But I'm already out because I set the profit target. So no big deal. And I'll update that in Discord. That was this morning for stocks and options. Did I put that in stocks options? Yep. So right here, I'm going to update that trade. So this trade, do a little reply action. Trade update. SPY, 930 expiration, 570 long put. $1 debit. Closed at $1.80 credit. Profit target hit. If you're still in the trade, I'm just going to say this. If anybody's in this trade, if you're still in the trade, move stops to break even and manage. SPY hasn't hit 570 yet, so there's more profit available in this trade. But I am out. I set the profit target this morning.
Either.
What's that?
The VIX isn't doing that much though. I'm wondering if this like sell-off is just a profit taking point.
I mean, it could be. It's felt. Look, man, we've been hitting highs, fading, highs, fading, highs, fading, highs, fading. Like, look at the pattern we've had this week. Every time it's open and faded, 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 open and faded. Like the all the aftermarket crap is like pushing these prices up and it's getting faded during actual trading hours. Like, this is a weird run to the upside. And like I said this earlier, this feels a lot like that 4th of July, like 6 days in a row, 6 all-time highs. And then as soon as it rolled over, we actually saw a reasonable correction. So what's annoying is I'm looking at that SPY 570 put right now, and it's probably trading for, I got out for $1.80. It's probably trading for like freaking $2 already.
Yeah.
I guess not. $1.75. All right, whatever. I'm just curious if it hits my price, which was 570. I want to see what this is trading for. So I mean, I can't complain, dude. I just took 100% profit on, a little put this morning, so no big deal.
Pretty good.
All right. Good. Zealous close out at $1.75. Excellent. Yeah, let's see if we hit that chart alignment 570, then what it's trading for. But mission accomplished. That is a nice day trade. Okay. If you want to manage the trade, use stops and cancel, replace until SPY hits 570 price. All right, just doing a quick update here. All right, man. I mean, that was pretty darn easy. So the day turned a little bit more directional. Again, the gamma squeeze stuff tends to work out really nicely. It gives me a visual roadmap, similar to what I called last week on the SPY going up to 574, 575 after the Fed. It did that on Thursday. Closed out with the trade today for profit. Closed out with the other trade today for profit. That's a lot of fast-paced action. That's really not my style, but certainly love it when it works and just helps beating up some profit. So Gary out for the $1.80. Awesome. And yeah, I wouldn't be surprised if we fall away a little bit lower. Frank, is there any type of structural damage in here that you could see if price were to fall? Let's look like a little bit more short term. You see how we're back inside this like FOMC, nonsense we had from last week. There's your FOMC low and your Thursday, your Thursday gap higher. We're back inside this range. Is this all we're dealing with? Is maybe back in here as we pull back to these previous highs and this becomes maybe a support zone? Or I would say, I'll still say this. If we take out the FOMC low, there's definitely some bigger volatility to the downside. Just my thoughts. You said this just seems like a profit taking.
Friday, September 6th. Is that what you're talking about? FOMC low?
No, the FOMC low would have been the 18th, the day of FOMC. That was the 18th.
Okay, so
I'm saying if we take out that low, yeah. So the SPY that's right around 560. That's like a 561 low. Let me look at the exact candle here. The low is 560.83. If I look at SPX, that low is 56.15. So SPX doesn't look like it's that's a long ways lower. If we're going to move all the way back to the FOMC low, that is a correction of another 2% lower. But from the all-time highs, that would be a correction of about 2.6% lower. The Qs today, we're still clinging to these gains, but it's green on the day. Russell is up a little bit, but again, look at this. After FOMC, Russell has faded 1, 2, 3, 4, 5, 6 days in a row to the downside. The Dow had a big sell-off candle yesterday, and it's kind of right in the middle of that. The Qs gapped up to fill this gap, and then if we fade that, again, like haven't made all-time highs in the Qs. So I didn't put I thought I did on this chart. Did this not update? Maybe I put it on NDX. Nope. Qs. Nope. I feel like my charts aren't loading everything. I thought I put a couple of horizontal lines here. So
the data, the drawings are delayed today.
Okay. Come on, TradingView.
I'm not sure why, but that's what they sent out.
It must be something to do with it must be something to do with Cosabella. That's so ridiculous. I don't even know what that is. Right? I don't know. Come on.
I don't know.
Norton antivirus.
Those suggestions say you do know what that is.
Yeah. Hafiz is asking, are you guys going to trade? Dude, I've already closed out 5 trades this morning. I think I closed out more than that. I took SPX 2 wins. I have SPY 2 wins. I have QQQ 1 win. What else did I trade? I think that's it. So that's 5 trades, 5 wins. Sure, dude, I'll trade. We got Costco coming with earnings tomorrow. That trade's pending. I mean,
so
are you not entertained? What's up?
If we continue to push lower, or we hopefully we close below 57.70 on SPX, because then I can collect that credit today. So if we do that, that would be a good trade. But on the daily chart, if we look at SPX, looking at this potentially inverted hammer candle here,
okay.
If it turns red, or if it's like a pin bar by the end of the day, I think what you're talking about, testing these highs, so 56.60, I think we could do that Friday. FOMC low, that's what you're talking about, structural breaking. If that turns lower, you're looking at further downside. Honestly, I see this trend line. If it comes down to this trend line, I think that could just be another buying opportunity, even though I'm not very comfortable with buying on a merely 2 to 3% drop.
Right. Right.
I think that's just kind of how it's going to be.
Yeah, I could agree.
So I think we could see a little fade here, but I don't. If it's a bigger candle than we expected and it touches this trend line, I don't think it's necessarily going to be a sign that the market's breaking. I think it's probably just another buying opportunity.
I think so too. I like a pullback. I like a pullback. That trend line you have is perfect. I think what I might end up doing is also remember that we still have a 200 EMA that hasn't been hit. What's your SMA look like, by the way? Is that your daily SPX500? Is that the 200 SMA?
Yep.
Okay, and so zoom out and get a bunch of extra data on that chart, and then count the number of bars since that last touch, because that's going to be like maybe close to 300 bars.
Yeah, I mean, there's several. Every time it touches it,
226. Yeah, 226.
Pretty good sign to to buy.
Okay. Yeah, I know. I mean, right now that seems like a big drop, but if we find that that's a 9% correction, I mean, part of me would be salivating to see the market correct by 8 to 10% again, and I would go pretty ham on some aggressive options if that's the case, if we had that type of pullback. So, all right, I like the levels. That trend line you draw makes a lot of sense. I think if we take out the FOMC low, that's probably where the market's in a little bit of jeopardy, just in the near term, not like anything long term. Not that I think of. So, but I just want to watch and see, because also I didn't expect it to really break the Thursday high from last week like it did today. And so it's interesting. Like, it broke higher, but it's fading back down. You know, the Qs did the same thing. They broke higher yesterday. They gapped higher today to fill that previous gap from the 17th of July. And then they're fading pretty hard today. The Dow is, after yesterday, the Dow put in a really nasty candle yesterday. The Russell has been fading for 6 straight days. And the Russell is actually, based on the close yesterday in the IWM, it's slightly lower. It's right at like the FOMC low from Wednesday last week. So the Russell's kind of stuck in this area as well, where, yeah, I don't know. We'll just see some volatility and some chop. That's all.
Well, let's consider this.
Okay.
If we're looking at the S&P on the daily chart and it doesn't close, let's say it closes just like this, I don't think this is enough to tell us that, okay, we're going to probably, test lower levels. I think we're going to have to see some clear indication. Otherwise, we're not really going to get a move. Every time we see something like this or like this, it's just not a very good confirmation.
Sure.
If we see a solid close, like I don't know, even right here, even this was wrong. But this is what I'm kind of looking for. We see more of a confirmation that we are trying to turn lower.
Yeah.
I think that's a good sign. I think the fact that we're slowing down is another good sign that maybe we're at a reversal point, but it could close back up here, and then it would look like we're not even close to seeing a red day again. So I think if it closes here or if it closes green, probably still look to just trade within this range that it's been doing. It's slow uptick throughout the week. Just continue to sell credit spreads.
I like it.
That's what I'm thinking.
All right.
You want to look at Costco?
Yeah, look at
Costco. You already did that.
I did
I haven't taken
morning,
it.
So we have earnings after market. Where the heck is this expiration? This is, shoot, I wish I had an expiration. So I've got 2 ES trades running right now. One of them is looking good for tail credit. So I've got them out to Friday and Monday. So this is where's it at? If I go to analysis here. So right now we're in the tail credit. I'm looking to see if I have a profit trap. So by tomorrow, as long as the ES futures feed finishes below 58.10 is my profit trap. But if we stay below 58.05, there's good profit there. I did basically like an in the money butterfly spread. So I'm hopeful on that one. And then going out to the end of the quarter, so Monday, do the same thing here. Very similar trade. So I'm looking to stack up a little bit of profit. I collected 285 and 275. I'm risking 215 and 225, and looking to see if price stays right about where it is today. If it does that by Friday, Monday, excellent. I'd love to see a little bit of a sell-off going into the end of the month, if possible. End of the month, end of the quarter. You want to take a look at Costco? I still like the trade. Do you like your $1,000 long call? I don't personally. I didn't love that trade. I don't think you took it, right? Because it would have been like $1,000 risk.
No, I didn't. I don't have any options plays on Costco. I was talking about selling the volatility. Because if they blow out or meet expectations on their forecast for earnings, I don't know how much upside we can get. I mean, at least in one day too. Like if I'm looking at a Friday expiration, if I'm looking at say like an iron condor here, I don't really know how much upside it will give. But if it does miss, I think what I'm more worried about is that if it misses and we get something around like 3 point whatever as their EPS instead of the 5.08 that they're expecting,
Yeah,
that could really hurt price. And that I feel like the volatility would be to the downside.
absolutely.
So that's maybe I could just do like a credit spread above price instead of taking an iron condor and trying to pinpoint a zone. I might just look for a top on Costco. I don't necessarily think what was it, a 6% move was expected.
We did like 6 and 6.5% is what we calculated. I'm looking at an implied move for the market maker move is around $35. And if we did 6.5% at a 903 stock price, we'll do 0.06 at first. 0.06 times 904. It's about a $54 move. Let me double check the numbers there. Also, I want to price this out because if I went to, let's say, $35 to $40 and I sell that, let's go. I'll try to make these numbers easy. Let's go like $40. So $40 and then 902 all the way down to 62. I'll do $40 there. So for an expected move of 34, I see a 26.45 debit. If I wanted to buy the insides and then sell the outsides, it'd basically be 2 debit spreads. But it'd have to be like it's a kind of a 1-day management. If price doesn't move a lot, let's just go back to price this thing out. Option slam, and we'll go Costco. So the expected move is around 4.5%. Okay, so that's why. All right, 4.5%. That seems accurate. I have 4.3, 4.1, 4.5, 3.3, 3.36, 407, 3.47, 413, 501. I'm just going to do 0.045 times 903. So we're looking at about a $40 move based on average earnings movement. The market makers are expecting around 35. So if I buy, let's go 35. Where'd that one go? Let's go here. I mean, I don't have to pay a lot more for an extra $5 of profit. So I paid $26.48. I mean, you have to get the move. This is why I don't love this trade if I was long. So let's just look at the move itself. Market makers expecting about $35. We're calculating about a $40 move. I think you're right, Frank, that the volatility is most likely to the downside. Like if it's going to miss in any way, shape, or form, that volatility to the downside as something that's been making, higher highs the entire year. Outside of our July to August correction, Costco's just been crushing it to the upside. So I still don't mind the trade that I'm in. I'm looking at this like 965 by 970. If somehow price blows up to the upside, I get filled on that credit spread. I like that trade. Let me double check my expiration though, because if it's out to the 27th, let me check this right here.
I'm looking at something too.
Okay.
It's a broken wing iron condor, and the first leg starts at 960, so that's the threshold. You don't want it to pass 960.
Okay.
Or if it does, you have what is this? You have like a 14, 15 point gap where you could hit max profit. But if you surpass 975, then you go into your loss territory.
Okay. So what would you, so I'm going to update my trade because instead of doing the 9/27 expiration, I'm going to go out to October 4th and go out another week. I'm going to find it in my stocks and options play. So I'm going to update on Costco. Let me find it here. Here it is. All right. So I'm going to update. So the trade that I posted on 9/23, I did a 965 by 970. I took that trade this week. It's pending. It's still pending. I'm going to bump that out to the 10/4 expiration. So I'm going to edit this message and then add a reply on my Discord side. I'm going to go out to the 10-4 expiration. So I'm going to put an asterisk here. Modifying the expiration from 9/27 to 10/4. Okay, now I can reply here. Modifying position. Actually modifying trade setup. Costco, it's the 10/4 expiration. Sell the 965, call, buy the 970, call 250 credit or higher. Modifying from the 927 expiration to 10/4 expiration. So I'm going to make that change right now. And that should be good. So that way, at least earnings can come out. If price has a little bit of follow through, I still wouldn't mind getting filled at that high and then fading it for the first week of October before we get into real earnings season and then before we get into the employment data. So let me cancel this trade right now. So I'm going to cancel and then go back into Costco for the 4th and go to my 965 sell, 970 buy, pending for $2.50 and take that trade at 250 there. All right, so now it's in pending order. Same trade, 965 by 970 bear call spread, credit for 250, but I went out an extra week instead of the 927, which is Friday. And the reason I'm doing that is in some crazy way, if Costco just blows through this level, and then I'm looking to get, and I do get filled on the trade, and all of a sudden it's like, we need it to fade. I don't know if it's going to be enough to fade in a day, so I'm going to give it a week to fade if we get that. But the measured move that I'm seeing is price goes up. If it goes up, the expected move is around 935 to 940. If we look at the platform here, this is basically taking your market maker move, and the upside is forecasted to be around 935 to 940. So it is still unlikely, based on this kind of standard deviation expected move, that we'll be hitting 965 to 970 to even fill the trade. But in the event that we do, I'm still going to take the trade and get filled. So I don't mind that trade. Also, this is probably a trade. I mean, implied volatility is pretty decent. Like the IB rank 65 on Costco. I like that 1-1-1 strategy that I'm doing. I did that on like Meta, Netflix, Costco. I wouldn't mind putting in some type of like bear call spread sooner than later. I just want to, get a good level for it. So yeah, we'll see what earnings gives us, man. So your iron, what the heck did you call that? Iron butterfly, broken wing.
It's a broken wing iron condor.
Okay. So that just means you're asymmetric on one side of that?
Yeah.
Okay. And how did that look again? You needed price to, are you trying to contain price a certain way? Are you tighter on the call side or put side?
On the call side. So I don't want it to go higher than 960 by Friday.
I gotcha.
And if it does go higher than 960, I would want it to stay within 10 points so I can get max profit. So if it closes at 970, be at max profit. But if it goes up to 976, you start to lose on the trade. So you just want it to stay below. And right now it changed to 480 credit, which means like you want it to be at least 5 or higher, because 5 is like 5 would be your break even. But I think right now the spreads are so wide, it doesn't even look like it's going to happen. It's 56 cents is the bid, $4.84 is mid, and 912 is ask.
Yeah, they are wide, dude.
So,
and that also could be because of earnings. With earnings coming out today after market, like things are a little bit wider because it's a coin flip. Nobody knows if price is going up or down, or what price is ultimately going to do after market or tomorrow's close or tomorrow's open rather. So yeah, I mean, around earnings, like they do get a little bit wider. Even the SPX, today it's like trading SPX this morning, it was, within like 5 cents of my fill, went 5 cents below my fill, but didn't hit it. So I ended up taking a small, like a 10-cent break even, as opposed to getting filled on my profit target. So they're definitely a little bit wider than, but again, this isn't like the VIX hasn't done anything. I mean, the VIX at 15 and change, like, the VIX doesn't have some type of crazy event back into the 20s, not yet. Would it even get there? Like, I'm curious where price would have to go if price is going to have to drop X amount of points for this VIX to rip back up here towards like 24. I do wonder from a percentage standpoint, what is that percentage sell off in the market? I would imagine we'd probably have to have like maybe a 3 to 5% sell off in the market for this thing to rip back up into the 20s. It's possible, but I'm not doing anything volatility wise until we either, one, get back down to these lows and I'll go long volatility, or two, we have some type of vol event that I can go short volatility. So as it stands right now, like, there's nothing I really have to do outside of just be patient. But I come back to the same conclusion. Like, I'm just cautious at these highs. I think there's still a lot of news before we have the Fed. And I know the Fed cut by 50 basis points, but this market will tell us really quickly whether they believe that the 50 basis points cut was enough to save the economy or not. And it doesn't really, like, it's not necessarily all the Fed, but man, the market's going to be super sensitive to it. So if we have, like, unemployment claims have been better, GDP came in as expected, but non-farm payroll next Friday, I mean, I don't know if it has the expectations. We have a bunch of Fed speakers lined up for today. By the way, the Swiss cut rates, freaking sweet. They did cut rates. Tell me it's weak today.
Yeah, by 25 basis points.
Good. All right. So Aussie Swiss on top. My trades, man, same as yesterday. I'm up like $8,000 on Swiss pairs. Fudge. I was hoping to be a little bit weaker of a Swiss move, but whatever.
You only have 8,000. Darn.
Yeah. Well, I mean, I'm looking to make like $50,000 on that account, so there's a lot more that I wanted to move.
Yeah, I feel.
Yeah, feel bad for me, Frank.
I'm over here sweating for $1.45 credit by the end of the day.
Yeah. What do you need for that $1.40? What do you need that trade to do? Is that your SPX
Stay
trade?
below 57.70. Yeah.
57.70. All right.
It's at 20 cents now, so it's looking pretty good.
Okay. So you're getting most of the credit, then you're trying to keep it all for that 20 cents decay. So are you up at $1.20 right now?
Yeah, it was at $1.45. It's now at 20 cents. So I'm up like 86% on the trade.
Yeah. Well, you know what I'm going to say.
Well, you would take profit, and I would too, but I just don't want to use up day trades.
Oh, that's right. I keep that stupid day trading thing.
Yeah.
Yeah. Dude, for some of those can you trade futures on Webull or no?
I think I can, but I try to do it, and
you probably can't trade futures options though. I think they'll let you trade like the actual. You can trade futures itself, like trade the futures contract, but you can't trade options. Because I trade a lot of futures options. So ES and NDX or ES and NQ, and then the micros. If you and sometimes they do it because I have trades on SPY, I have trades on QQQ, I have trades on SPX and NDX, and so I'm like, well, I can still express some type of trade in the indexes, but the futures market is pretty solid. So anyway, I don't know if you can, that works pretty nicely, but if you can't, I get it. But all right, dude, I'll be cheering that trade on for you. It's got to come all the way back to today's high essentially for you to be threatened, right?
Yeah, I mean, which can happen.
I know it can, but
it happen before.
So yeah, I mean, I would be more likely to think that today with this move lower, that we're coming all the way back down to fill today's gap. If the market's eager to rip on that gap, I don't think we're coming all the way back to the highs. There's no major catalyst today. I mean, Powell didn't say much from what I saw comments this morning. Powell didn't say much today about monetary policy. He gave like some virtual fireside chat nonsense, and there's all these other Fed speakers lined up, but I don't see the market really doing much. So yeah, I think your trade's okay, dude. I hope it is. Obviously I can't
I'm not
give
going
you
to
the
say
$1.45
anything.
credit. Yeah. It'd be like if you're playing golf, this is why you don't talk to other people's golf ball. Like, come on, get in there, and then it like lips out. Don't say anything.
Yeah. Just don't jinx it.
That's right. That's right. Just tell me at 4:00 that you made profit, and I'll give you the golf
I
club.
will. Only then will I tell you.
Only then is it truly profit or loss. Now it's just discussion and opining. All right, let's talk about some other stuff, dude.
In all seriousness, though, like if I had unlimited day trades, I would have been out. Like this is just, it's just an obvious close right here. But if since it counts, it just
I get it.
Tough to
dollar
take
index.
A day trade.
Dollar yesterday, oil's down, natural gas. Natural gas with a big gap up, starting to pull back. Gold, another all-time high, 26.84. I mean, all right, Frank, I'm going to ask you something on gold. Are we going to find, let's say, 2,500 before we find 3,000?
I mean, 29.
No, I said, are we going to find 2,500 before we hit 3,000? Meaning, is gold going to pull back at all before we continue to melt up to the potential like $3,000 round number highs?
I think it has a higher chance of going up than down.
So no pullback.
I'm waiting on like almost any kind of pullback, basically.
Same here, dude.
But we just have not
any
seen
pullback.
it.
I know we don't get anything. So yeah, and it's been crazy aggressive. So
I think maybe I could buy it. I'll just buy it at the highs so that it will come down for you to get at a good.
That is, dude. That would be that's the most like generous thing you can do. Is you buy the highs to get screwed over, and then everyone else can get a chance to buy that dip. Yep.
Yeah.
That's really nice, man. I would appreciate that.
I've been wanting to chase these highs for so long.
Yeah. I know it. I mean, I'm looking at this like my silver. Is silver up today or silver flat? Silver is up. Ooh, silver's outperforming. Hooray. So gold, let me go back to this account here. I just don't have a big, I mean, I guess I take that back. Like I did make some pretty good plays on GLD. Like my profit for the year, GLD for the year, I mean, I'm up, 11 grand, but I'm way more excited about silver. I mean, silver, I'm up $39,000 because I liked it more, and you can tell that by how much bigger my trade size is. And then silver futures, I'm up another 10 grand on there, and then gold futures, I am up another. Here's another, let's see, 900, another 5,600, so another $6,500. So I've got like $17,000 running on gold. I've got about $49,000 running on silver. Silver I still like because I can measure the move. Gold, it's just now in like no man's land. This thing is in orbit and may just drift up until, and I'll probably start laying out a bunch of like, are we overbought? Are we overextended? Trying to protect some profit, reestablish some type of pullback positions if we get one. But I don't know, man, you might be onto something. You got to buy the highs and see if it wants to melt up. I think if anybody were come into this session and say, gold, look at gold, what do you do right now? I would ask that person, how much are you willing to invest in gold? Because if that person says, I'll put in $1,000. Well, I would do $330 right here, and then $330 right here, and then $330 right here. I would just do trades 1, 2, and 3. And 3 is unlikely to get filled. Or if you did it this way, where you take, let's say you trade 1, 2, and 3, and you're willing to buy it higher as just like, look, if it pulls back, I get filled. If it doesn't, I'll buy the breakout again. But basically, don't throw the entire trade in and say, this is where I'm wrong. I don't like that trade. I think this is an investment that $3,000 and everything surrounding gold right now has one of the better stories running. It's like this market is ripping on the Fed's cutting rates. Central banks are coming down. There's still an inflation play out there. It's the, store of value for the globe. And it matters. Like it's always been a hedge, and with lower rates and debasing and losing purchasing power, gold's always been there. So I hate buying the highs, and I'm probably not going to buy the highs, but I can also still add in bull put spreads on gold futures, and I can add bull put spreads on GLD. But silver, I still come back to silver because it's just so much cheaper right now. Would I rather trade GLD at what's GLD? $200 and some a share?
Yeah.
$246 a share.
240.
And waiting for a pullback that we might not get, and it goes up to $300, hooray. Or I trade silver, and I know that silver might not perform the same way, but if silver goes up to $35, $36, I mean, it's measured, and that still gives me another, like I can measure out another 11 to 12% of profit. And my longer term silver trade is like another, that is another 48% of profit. So I can't measure that with confidence on gold, because if we're going to go up another 48% in gold, what is that price? Let's go up 48% in gold and see what it looks like. We got to go way the heck up here, man. So current price 48% in gold is a move all the way up to $3,956 in gold as a spot price. I need silver to go to 45. So I think silver is a little bit more measurable, in my opinion. Gold's out there, but yeah, I guess, look, enjoy the melt up. Nobody should be complaining that, like, oh my gosh, like gold won't go. I mean, if you're long gold, enjoy it and keep enjoying it. If you're short gold, I think you're an idiot, because this is probably the most short-term dip that's going to be bought would be like, if we get a dip on gold, it's going to be bought. So I think this is like a great, just melt up, be patient, move your stop losses, just trap and protect as it makes higher highs, let it do its thing. But if this starts to look more like a crazy ballistic, like exponential move, then I'm getting more and more into using stop losses and trapping profit. Because if it's been healthy, dude. I mean, we had push and pause, push and pause, push and pause, push, pause, push, pause. And we're up here and it's getting a little bit very directional, like it's just melting up. And so I'd like to see just another pause and a break, pause and break. These are healthy. But if we go straight up and almost parabolic, then I want to get out. I want to trail, because that will likely crash. We don't see straight up moves that end in chop. They go straight up and then they have this wicked like cup and handle pattern that tops out. And I don't want to be part of losing that potential profit. So I think right now, as it stays like in slow melt up, just keep enjoying the drift. I'm just, I'm a little jealous that I don't have a bigger position in it. So what are you in right now, by the way, Frank? In gold, are you long GLD? In anything else? What else you trade?
No gold.
GDX?
I wish I was. I got out of GDX very early for like hardly any profit.
Gotcha.
Really sad.
Right. I'm sad.
What am I in though? For my equities, I'm in Oxy, Baidu, Nike, SoFi, Nvidia.
Okay.
Which are doing well, except for Oxy.
Yeah. Well, you could be in Walgreens.
What is that? WBA or something?
WBA. I'm in Walgreens with a break even of around $14.
Man, I wish I was in that trade.
What's that?
I wish I was in that trade.
You do? What, short?
Yeah,
no,
short trade would have been.
Short trade would have been great. You can, anyway. I mean, I have protection on this one. I did it for a dividend play. My break even's around $14. If we come back and fill this gap, I'll get out of the trade. I need a bit of a squeeze. I need to set some chart alarms up here, actually. So let me move this up here towards around, I'll go $15. $15. There we go. So if we get a squeeze on this one, I'll get out of it. But yeah, this is like the one sad pick for me for the year, that it's like, well, I like the dividends. I lower my cost basis by about $1,000 every year. I mean, it adds up, but it's like, dude, I could be in this trade for another 1 or 2 years before this thing does anything good. However, if I check where is my snowflake analysis here? Walgreen boots. Dividend at 12%, not well covered. Doi. What's that?
Do you own it, or are you just doing spreads?
No, I own
both?
I bought shares at like $20 and then down at 11. So my break even's around like $15.
In the meantime, have you been like selling calls or puts?
Both. I've been doing collar trades. So essentially, when I put on the trades, I had a call above and a put below, and so I've lowered the cost basis a little bit with those long puts. That's helped a lot. But now the puts. I mean, if I look at the options chain, the puts are only offering like they're not expensive to buy the puts, but they're the legs themselves are few and far between. So I think I went out to November, so I can buy, like an 8, 750, 7, 650. I'm not trying to pay an arm and a leg for puts because if we're bottoming out in any way, shape, or form, I mean, I basically have a long put for it's a $5 long put for 19 cents out to January. So if this stock just continues to just suck, then at least there's something I can do or take a 19-cent debit, maybe turn it into like 50 cents to maybe $1 if I'm lucky. And that would lower my cost basis by, $1,000 to $2,000. And I lower my cost basis, and that's okay. And then I'll just roll my calls down, add more protection, get more aggressive. I mean, if I give myself another 6 to 12 months, I will probably lower the cost basis here down into like $10 or so. If I can get $10 as a break even, and we come back up into the gap, I can flip this thing for maybe $3 a share. That'd be a 6K profit. So what's in a $10,000 to $15,000 drawdown right now is potentially still going to be repairable for like a $4,000 to $6,000 profit. But I've got to be patient, and it's just one allocation. It's only like 1% of the account, but it is an annoying trade. So anyway, that's Walgreens. So everyone, do me a favor, go to Walgreens and buy an Arizona iced tea. See if that help boost the stock. Silver similar with gold. Yep. I mean, silver's great. I like silver a lot. I'm still long. Bitcoin is up to 65K, which I think is interesting. We are pushing higher. The next leg on Bitcoin would be I don't know if we're ready to make this full on breakout yet. I'd almost love to see Bitcoin pull back down into the middle of this range one more time. I'd love to see Bitcoin pull back into these 50K lows again. But the other thing is I'm long, and this has been accumulation. I've added exposure on IBIT. I'm really excited for the official options to go live on IBIT, because if they do that, then there's ways I can take this cost basis way, way, way lower and hopefully not get it called away. It might just be doing more bull put spreads. If I'm pretty confident that we're going up here, Frank, then my BITO, my IBIT, dude, I'll be doing credit spreads like every month and just trying to grab some income, lower my cost basis, and let this thing rip to the upside. And I'll never sell a covered call, because the last thing I want to do is sell a covered call and get in the way of a potential, rip to the upside. So, but I'm not sure when that's going to take effect. I looked it up, like OCC, CFTC haven't approved the official options yet, and those have to be approved for it to go live in the broker accounts. But I don't know. I'm thinking maybe by if not the end of the year, like maybe early 2025, we start to see those options go live. So could make for an interesting development on Bitcoin.
BITO's options, BITO kind of stinks.
It does. It's not great.
I mean, I guess it's up 3% just like Bitcoin is today, but
yeah,
when you look at the trend,
let me look at I'm going to look at a 16. What's IB? What's the or BITO? What's the IB rank? 34. If I went out, let's say to the end of the year. Oh my gosh, dude. I mean, that premium's pretty legit. I go 16. I mean, for taking on another 100 shares, I could get $16 naked put. I don't mind that trade, dude. I mean, I do have some shares, but let me put this on here. So $16. This is another little income play. Let me see what I have exposure on for BITO. I know I've got a lot of shares stashed in here somewhere with IBIT and BITO. So I have 200, 200, 200, 200, 247, 200, 200. One additional trade isn't a big deal. If I get assigned at 1650, I take on the shares. That's okay. I still have a call. These are looking rough. The $23 call, $23 call, $27 call. Those are looking pretty crappy. That's an out of the money. But I've got naked puts at 20. That's out to January. Those should be okay. I think I'm going to add in a $16 put, man. So it's right below this level here, 1610. Price needs to obviously do some more work. We're not ready to make the break for it yet, but if we get up into this open space, then hopefully that looks better. I'm just going to put in a $16 put. Let me see here. So if I do a 16, I go to December, end of the year, 16 by 12. I can keep it risk defined. There's no way that's going to work. 16 by 12 for $1.64. If that gives me that, then that's taking up way less buying power. Even that's not bad. All right, $1.94. That's the bid. All right, I'm going to do this, man. I'm going after some income here. I'm doing a $16 and a $15 put on BITO. So I'm going to place this trade here. Let me see what I have here. BITO. That's in my Roth IRA. That's in my Schwab account. I like this trade a lot. So trade. Oh, fudge. BITO out to December. 16 and 15. So it's an income play. If it's not assigned, then I'll get $389 by expiration. Let me see what this cost me in a Roth or an IRA account. So $2,700, not that bad. I think I'll do one put. So I'm going to go margin accounts, 2 puts, cash accounts, 1 put. And I think that's a good income play. So I'm going to add this in, dude. 389. And right now the bid is 1.94 plus 1.35. That's 329. So I might not get 389, but if I get like 375, let's see what we can get. So I'll put this in here. 389 pending. Not filling. All right, let's take this down to 380. Nope. I'll probably have to work this down. Maybe 350 will get filled. And this is the fun stuff. I'm just trying to get anything above the bid price to get a little extra credit. 365. That was great. I just got an extra like 40 cents of credit on that trade. All right, so 365. And ready to place this across the board. So 9732. Filled. Oh, you turds. Come on. 364. Gosh darn it. I hate that when you can get filled for a few accounts and then it's like, nope, we're not going to fill you there anymore. So now I got to figure out where the sweet spot is. I'm like Chip Douglas trying to install cable. That's a cable guy reference for anybody. 359. Okay, and then one more account here. Bro. 355. Okay. All right, so I'm adding this in. This one's going into Master Tracker here. So BITO, December 31st expiration, 16, sell put for $1.94, 15 sell put for $1.35. And I collected 3.55 to 3.65 total credit. That's on margin accounts. And I'm willing to own the shares. And then I will be adding in on the IRA accounts. I will do a 16 and just get the bid price. So this one here, filled at $1.94. Filled at $1.94 and filled at $1.94. Got it. All right, cool. And then the 12/31 expiration, $16 sell put for $1.94. Credit. This is all shoot. This is all cash accounts. Okay. So I am adding this in, my friend. So a 12/31 expiration, 16 sell put, 15 sell put, 3.55 to 3.65 credit. Willing to own shares. So because I'm willing to own the shares, this is not a naked put. This is a cash secured put. I'm willing to take the assignment. If I get assigned, I will have the $16 minus $1.94. So I own that at $14.05, $14.04, $14.06. Yeah, 16 minus 1.94. So I'd own it at $14.06. And then the 15. So 1365 plus 14.06 divided by 2. I would own shares at 1385. Break even. So that is my potential play. Now, if there's no assignment and this price just goes up, if this price goes up and there's no assignment here, then I keep all the credit. So I'd make $350 per contract here. On my other accounts that I just did the $1.94, I'd make $194 a contract there. And it's just an income play out to December. So that is what I'm looking for. If you don't want to take the assignment, then you know the risk is just making sure that price doesn't come back down, to these levels. I would say your stop loss is going to be like 100 to 200% of the premium collected, and that's an easy way. If you're doing naked puts, that's always a safe play. Is just accept the 100% or 200% stop, and not worry about it. But I'm going to take the cash secured put and work my cost basis. So let's go screenshot here.
You done?
I'm good. All right. Any other charts, Frank? My gosh, dude, we've been rolling for an hour and a half. Fun stuff.
Yeah.
All right. I know you want to go. You've been
No,
antsy for probably 17 minutes.
I think it was like the last 5 to 7 minutes where you were trying to fill in every single position, and it was just nothing.
It was
to
too
talk
much.
about.
It was too much to watch, huh?
It was just like,
Well, that's where you got to step in
man.
and fill. You
Get
got to
on
fill the
with it.
noise, dude. You got to fill that void, Frank. All right. I'm getting this posted in
Yeah,
Discord
but
right now.
like, our ideas were said. We've been on for over an hour.
I know.
All you got to do is fill in these positions. No one wants to watch that.
Are you serious? No, I'm just kidding. I get it. Hey, you know what? Then they can tune out. I can turn off my channel. I'll stop talking out loud. I'll go. All right. That's the trade. I'm getting posted in Discord. It's in the alert section if you want it. I'm telling you what I'm doing. So, the more transparent, the better, in my opinion. And happy Thursday. All right. Thanks, Frank.
I guess you're right. Yeah.
Hey,
Yep.
I'm cheering on your
Thank you.
SPX trade today. Let's get that $1.45 for you.
Thank you, sir. Hopefully it works out.
Yep. All right, dude. Have a good day.
All right.
All right.
You
See ya.
guys. Thank you.
Yep. Take care, everybody. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.